Right, I think I'm live now. You know, I've been talking to myself for the last 2 minutes. I'm trying out StreamYard as a third software to help me do these streams better for you on YouTube. And so I was busy asking you guys, can you hear me? Can you see me? Right, so can we just quickly do a mic check? Can you guys hear me loud and clear? Can you guys see me? Yes or no? Nice prayers, bro. Yeah, man, these are all your prayers. I literally went with what you guys asked for in the private Telegram group, and then if after that, if there's time, I will then get into what I want to get into. But clear, fantastic, thank you. But the whole point of the war rooms is really to help, you know, students, and we made it public and free, just to help the trading community. So if you guys want me to look at stuff, definitely I'll look at that stuff. But I always have a set of pairs that I need to get through. So even though today we're doing these because that's what was requested, tomorrow I'll be uploading a pre-recorded version of the pairs that I need to get into. And the reason for that is every week we need to have a holistic look of the markets, right? So remember, the first financial quarter is about building your clusters, right? Your clusters are going to kick off one day out of control and you won't even know where to touch yourself. But the best is to just keep working systematically. So there are many other pairs that I need to sift through. But this is what the students want us to look at. We'll look at that first, and then, you know, later on, sorry, I look distracted. Then if there's time, then I can go through my usual list of stuff we need to do. Right, so ladies and gentlemen, good afternoon. Shake my hand. Here we go, shake my hand. Yeah. Jumbo, we're locked. Fantastic. Right, so let's get cracking, guys. This is going to be the biggest play. You see this here in front of you. In front of you is the Facebook stock. I mean, I did do a good job, I think, of going through fundamentals in the midweek. We covered ADP. We worked on predicting NFP and looking at the levels, etc. So I won't waste too much time on that kind of stuff, right? I really think, you know, holistically, we kind of like nailed it. Now that we know, sorry, let me just kill the feedback. Now that we know, right, exactly where we stand in the markets, exactly what the data looks like, there are going to be a couple of things happening this week. Predominantly CPI, I'm sure. CPI always shows up the following week of NFP. Sometimes they delayed by 1 week, right? So CPI is going to be an inflation indicator, and we already know the story. We know the story from November. NFP has just proved it. But I want to remind you guys of one thing that I added to your layer of understanding on Wednesday, or Thursday rather, Thursday night, I think, was that these figures are absolutely important. So let's have a look at this. This was Friday, NFP, all right? And you can see here, we got the shock of our lives. Well, not really a shock, but it was a shock because not only we beat the numbers, but we beat them superbly at the back of ADP, right, saying minus 300,000 people lost their jobs, right? The government was like, no, 467,000 people got jobs, right? So that was a big deal. But look at a couple of things, right, that you should never, ever forget to address when you're looking at your NFP, your post-op and even after, right? So your before and after, absolutely important. The unemployment rate went up. Now, guys, there's something called market manipulation, and they can do it. It's their market. We were not here to fight institutions and banks, right? And we can't afford to. Our accounts are not big enough to counter, right? To counter institutions. That's the job of hedge funds. Hedge funds hedge, they counter. But we need to know the game, number one, and number two, trade alongside them. ADP says, look, man, there's like minus 300,000 jobs according to our small statistic sample of data. ADP is simply a private company. It's like Statistics South Africa. If in South Africa, there's a company called Statistics South Africa for the labor market. I used to write for them a long time ago. I also used to write for the Labor Bulletin, the South African Labor Bulletin. Still has a lot of my articles online for sale, right? But all these little private companies do surveys, right? And that's what ADP does. Now, when the official data comes from the government on Friday, and these two sometimes go together, sometimes they oppose each other. We can't fight that. But when this happens, where NFP is thoroughly beat, right, I'll review the steps we've already covered. So it'll take like 5 minutes on why we could have seen this coming and what trades we were supposed to be in. But this is interesting that unemployment went up. Don't forget this. Because one day these guys are going to come out and say, we told you so. Unemployment has gone up. Look at the contradiction. There has been 467 new jobs created in the month of January, but still unemployment went up. It's true. Oil and water, right? So this is some government political stuff going on here. And then here's the next important thing here. You see this? This is average hourly earnings, right? Remember, we spoke about this on my Friday market review. And I was explaining to you guys that sometimes when it comes to markets, you're going to have a situation where, and unfortunately, because I'm using StreamYard, I don't have the whiteboard that I'd always have on Zoom, but we can do it right here. You will have inflation going up. Why is inflation going up? Because of QE, because of COVID, because of everything that Powell did to try and sustain the economy. But as inflation was going up, he did this by printing a lot of money. Because he was printing a lot of money, prices were going up. Prices were going up because people were getting extra money, and people with extra money don't save, they spend, right? Economics 101. So as this is happening now, the economy itself is starting to overheat. So what does Powell do? Tapering. Tapering is to cool all this off. He cools it off by stopping QE and reducing it, hoping that this will even out, because the new problem in life right now isn't corona, it's inflation. But because according to their data, more people are still being employed in the new America in 2022. More people are recovering from COVID disasters and unemployment. Because of all of that, right, these people are being employed, getting jobs, meaning there are more people in the markets, in the labor markets, who are being employed, getting paid. But when they get paid, they are competing with high inflation, which means the cost of average goods goes up. Bread was $1 today, tomorrow is $1.10. Next month, $1.15. If you're in South Africa, just think about fuel, right? Every time you close your eyes, here's the government increasing fuel, right? The cost of livings go up. But if fuel goes up, the farmer can't move his potatoes from the farm to town, to the urban areas, without increasing the price of potatoes. So because fuel went up, average goods and services need to go up. But at some point in time, all these people who keep getting into the job market are going to do what? They're going to request a higher wage. Why do I want a higher wage? Because things are expensive, because of inflation, because of high prices. So we come here and we see that, listen, man, unemployment might have gone up by 0.1%. So it's not too crazy, right? It's like literally, but it did go up. But because of all these new people and the current people working, the average earnings per month went up, which means people are demanding more wages, right? There are people who are toying for more wages. So when they get more money, again, the cycle continues, more spending. So I anticipate, just going to call it right now, before we get lost in our war room, that on Tuesday or Monday, whenever it is, let's see, this coming week, it's on Thursday. On Thursday, on the 10th. So there are some people who were trading Nasdaq, and I kept telling them, I'm going to wait for the 10th. I want to see something. Here's the final data I'm waiting for. Right, so CPI and core CPI, I suspect these are going to be very positive. I suspect that inflation has to have gone high. I suspect, I mean, it only makes sense, right? More people employed, average earnings have gone up. I suspect CPI is going to go high. And if that's the case, then we're going to have an interesting rally, starting with the DXY. So let's look at the dollar real quick before we get into the assets we've mapped out. So DXY was the easy to go by, chart, right? Interesting, right? So this is the dollar index on the monthly. And it's actually nice that we're starting here, because when was the last time I opened this thing for you from a governing perspective, right? You need to see these things as they are. Let me quickly find a different DXY chart. I actually found that different brokers were showing different things on DXY, specifically the supply here. There's one broker in the entire world where this supply is already broken, right? And I found that interesting, right? This, by the way, if you've never seen me teach on this, and I was big on this in 2020, this is Donald Trump's supply. Trump, it's the Trump supply. And I've proved it so many times. You check when Trump was elected president, you will see it's the same time price rate all the way here. This rally is from Obama's demand. Obama is a Democrat. 2008, 2009, when Obama became the president of the United States, during the biggest financial crisis of the world, you go black man, right? You pushed the dollar up. Why? Because it was a safe haven. Democrats, by the way, if I can prove this, easy. Democrats, this is Obama. Just check when he was president. Democrats, generally speaking, when it comes to the dollar, create demands. Democrats take over demands. For example, this is when Trump came out of power in November. So from the Trump supply, Trump comes into power. This is Trump during the China War of 2019, etc. This is Trump in 2020 of COVID. And when in November of 2020, when Biden comes in, price runs into a demand. And therefore, since then, the dollar has been bullish because price hit a demand, but it's in line with governmental politics. There's a lot of good stuff we can teach on this. But I don't really want to start because people are going to ask me to create a whole module. Like I'm already 2 modules in and 2 modules coming out this February. I don't, if there's a need for me to make a fundamentals model, I will, but we need supply and demand. Right now, if you look at this chart on the governing perspective, right, we can do something like this. You will note that we have not yet arrived. We are about to arrive, but we haven't arrived. However, you know, although it happened clean here, there was a clean rally. No pause, no 365 candle, at least in Akina Hashi candlesticks, right? If you go to normal candlesticks, it's the same story. It was clean. This is always dangerous, right? That parabolic stuff, because at some point this thing needs to crash. Now, in normal candlesticks, you can see that markets are doing a very good job to secure a strong dollar. This is what I mean by I want to see distribution. Before I make a trade, I need to see distribution. See how price dropped in, how price moved sideways for 3 months, shot up, how price is now moving sideways for another 3 months. Yes, this red candle is big, but it means nothing because this is the month of February. Until this candlestick closes next month, it could be green by the 1st of March, so we're not going to judge it. But I like this. I like the distribution, right? Because it secures me. As markets do this on a higher time frame, they start to create all these bases, all these demands, the ladder step. When we get to the dollar, all right, so before we move on, let's all agree, it actually has not, hey, everybody shake my hand, I see you guys, I appreciate you. It hasn't reached the supply. Even if you want to argue with me and say, but Leroy, there was another COVID supply when Trump, blah, 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 I can see an imbalance, right? I'm not saying you'd be wrong, but I'm simply saying price has not yet gotten there. Until price gets there, I personally am still dollar bullish in the long run, personally, which means when I approach these news events, someone sent me like about 15 people, and I'm sorry if I haven't responded to most of you. I've just responded to the names that were written, 365 students, and I will respond to everyone evenly. But it's not that I appreciate the compliments, guys. I honestly, I truly appreciate it. But I just want you to be very clear. I am not a market genius or a market guru or a market maker, whatever. I am simply just a student of the market. When I look at price like this and I tell myself, look, when price hasn't arrived at a supply, I just go back to my module 1. My module 1 says demand to supply, supply to demand. Price is predictable in that event. Therefore, when we get to news events, as crazy as they are, ADP and NFP, all I had to do was to come to this chart here and then start to think, right? So before ADP came out, just before ADP came out, price was outside this demand. Just before, maybe 24 hours before, 12 hours before, price was really strongly approaching a demand. And I had to ask myself a simple question. There's not much distribution. It does feel and look like a valid demand, but it'll also be a perfect place to track me. Why? Because if price is at a demand, right, it's supposed to go up. But what if they're using ADP to sink the dollar lower so that they can buy low? Then I looked at the tools that I give you guys in module 2, trend line drawing, market structuring. This trend line has not been violated since, you see, since the FOMC. It's not just an institution's trend line where smart money is buying. This is the FOMC trend line. It was created by the FOMC on the 16th of June last year with that big interest hike, right? right? That exploded the dollar out of the governing demand. So I'm like, okay, damn, man, this guy's been protecting his trend line for the longest. When price dropped here, it stopped at a trend line. That's what I need to see. And then I kept seeing a rally, and we covered this the whole of last year. So when it came to the simple decision of ADP and NFP, I then went back to module 1. What does module 1 tell us? In the event you have to choose between two areas of values, when it comes to demand, buy low. Smart money will always go for the lower demand. So I knew that ADP was going to be a flap, and I suspected, wasn't sure, wasn't confident, but I suspected that this would hold. But if this demand is going to hold and it's the dollar, it means NFP has to be positive, right? Because if NFP is negative, then this demand can get taken up. And there's nothing wrong with that, except for the fact that it will be the first time the FOMC is violating his own trend line. Because remember, once you break this trend line, the FOMC can't control that now, because what banks are going to do is we're going to look for a better supply and we're going to start to shoot down the dollar. And nobody wants that right now, as far as I can tell. There might come a time for this, but right now, nobody wants this. Everybody wants the dollar to get to its destination. All right, so that's kind of like what we've had. Now that the dollar is where it is, we have to look at the pairing relationships between risk on and risk off, right? When we are risk off, price will go up on the charts that we're looking at. Things like euro, AUD, NZD, pound, all those kind of things will run because we are risk off, which means risky assets will do well. Nasdaq will fly. Those are all risky assets, right? Let's quickly look at Nasdaq, because I know a couple of you guys are in it. And just to reiterate, there are a couple of you that I'm running an experiment on. Those of you who told me exactly where you were at, right? So I drew this for you guys on Thursday that night, and I said this might hold. And some of you said it won't, some of you said it did, and it's all fun and games, so far it's holding, right? Nasdaq bounced off a weekly demand, okay? But for perfect MTA, there's a daily demand in here that I am personally waiting for. Personally, I would love it to come into that area, because then that for me would be the hallmark of really buying cheap, right? Is it gonna get there? I don't know. But because it didn't get there, I'm not in the buy. However, there were some very smart geniuses like yourselves in the group who bought Nasdaq at, what was that number? At about 13,800, somewhere here. And so all you have to do now is just hold. You have to hold. Obviously, I told you guys to get out of, being at risk. So lock profits. So some of you are holding at about 14,400, which is the bottom of this area, which I think is fair play. All right, we covered why the stock market went through what it went through in Nasdaq. So everyone I spoke to has their entry points protected here at 1,400, and that's because even if we get a fall, as price is clearly still falling, hopefully this H4 area there will hold it. But if it doesn't, then my thesis of being negative still, stands. I'm not in these buys. I'm just covering you guys. But in the event it does work out, because this was a golden ratio retracement, right? And if it's arrived at a demand to go back up, then that's a lot of money for anyone who is patient. So be patient for those of you currently in the trade. Those of you looking to get into Nasdaq, we're going to have to wait. I'm truly of that belief. I don't do hocus pocus stuff. I'm not buying at 4:30 because it's 4:30. We respect money in the academy. We're going to have to wait for some clear signs, because it's only January, February. Price hasn't even beat its last year's all-time high. All right, this all-time high was made on the 22nd of November. There's still a 2022 rally coming to this. Most of us in the profession, just so you know, we all believe, most of us who know what we're doing, we believe the stock market is long due for a crash. 18% drop in Nasdaq is not a crash. 18% is a correction. This is a market correction. Anything below 20% is a crash. And I'm pegged very much on focusing on a stock market crash. Problem with crashes is you can't time them, because the Fed can interfere. All right. What I like about crashes is that Powell is very, very big on crashing the stock market. It protects the dollar, because the dollar becomes a safe haven, number one. But number two, more importantly, when these big tech assets start to drop, the bubble cools off. Because remember, when you get a bubble and you have inflation and these big tech companies keep increasing the price, you're going to have a big problem. But just looking at Facebook, if we one more time, because this is a very big thing, Facebook is about to change our ideas of life in general. And anytime a mega company is about to do this, they drop like crazy, right? So Facebook had terrible numbers, which is quite interesting. All right, very interesting. And Facebook is nowhere close to a governing demand. So two things are going to happen here. Number one, we're going to get a retracement buy where Mark Zuckerberg, as the biggest shareholder, who is a multi-billionaire who's lost 30 billion, uses half his net worth to catch his own stock. He can do it. Elon Musk has done that for Bitcoin many times, right? Just by buying 1.5 billion bucks of Bitcoin, he literally acts as a whale to catch it. That's what we mean by big money. Why? Well, because this thing has dropped more than 61% now, right? It's a perfect buying place for anyone who was owning the stock at 400. For all the sellers who bought at 400, most of them have been liquidated. This is real cheap. So now he can buy more shares and own way more of his company right now if he wants. Option number two is that, because you see the problem with candlesticks, and let's just talk to that. Sorry, I want to get to giving out signals, but this is important. Look at this. This is a big red candlestick, but it's a monthly chart. So now you have to ask yourself, today is the 6th of February. It's the 6th of February. And already in the month of February, this candlestick is this big. What does this mean, right? Can you show me on this chart historically candlesticks that are bigger than this? Because if you can't, we know that there's going to be a high chance of a retracement. And that's just how I think, right? And as soon as I can control, I apologize. As soon as I can quickly control this, I want to show you something. Now look at the candlestick anatomy. If I make it big, you see how there's a little wick already? Right, so we know that for red candles, those of you who did my module 1 or module 2 or whenever, one of my public lecture videos, I briefly talk about this. We know that red candles in supply and demand sell high, so selling starts high, sell high, and in green candles buy low, so buying starts low, which means in red candles, the open is here. And the close of a red candle is at the bottom. Because you're a seller, you want to make money by pushing price down. Everybody should know that. Now, there's a wick here already, but this is a monthly candlestick for Facebook. It's a monthly candlestick, and the wick is out, which means the body of this candlestick is closed, but it's the 6th, which means there could be a big spring here, right? So for the rest of February, this price could quickly go back up. I wouldn't be surprised, if that was to happen. I wouldn't be surprised if Facebook decides to spend the rest of the financial quarter, which is February and March, right, springing a little bit just to come back down, touch a demand, and then we go, right? So I'm really hoping they do come down here. I really want to buy a big chunk down here. I want to buy a massive chunk down here, right? This is as low as I think this thing will ever come to. All right, but there's a high chance that I might miss it if it bounces from there, right? If you look at the weekly time frame, you can start to see a big engulfing pattern right there on the weekly. So that's why I'm saying I wouldn't be surprised if there's a rejection into that and then drop and then we shoot up to the moon. But I'll leave this chart for another couple of weeks, and then we get into we'll get to see the development of markets. But this was a crazy week for the markets, one of the most exciting weeks for the markets this year. Right, so on to what we need to do today, guys. Let's start off with AUDUSD now that we know what's going on. Now, before we do that, on Friday, every Friday, I will be releasing a video of market reviews, and in that video, guys, I'm just having a look at it. In that particular video, I'll be particularly looking at trades lost during the week. So remember, I'm sharing two public accounts with you guys, my 25K account and my I think it's only $6,000 account, right? I'm sharing two big accounts, real accounts, and I want Fridays to not be about trades won. I want them to be about trades lost. There is nothing I learned from winning in the markets. When I win in the markets, I know my rules worked, right? So every Friday, I want to review trades lost. And this week, we were pushed out of AUDNZD and EUROAUD. This was a long time ago on the 18th of Jan. right? So these two things happened this week, and I want to explain why. Because I had to learn why. I had to make sure I get the understanding of why, what's going on, right? So I'm down 2 trades in cluster 1, and again, it means nothing to me, not because of money. No. It means nothing to me because of the cluster system. The cluster system requires you to make 20 trades before you can make an objective decision about whether you're a good trader, bad trader, because you might still average out profitably because of risk to reward ratio. All right, but let's quickly, if you don't mind, review why I lost those trades. And some of you might have been in those trades with me. So it's absolutely important we learn from why. Our style right now is set and forget because of how busy I can be and how busy you can be. But it's absolutely crucial, right? So this was the setup we had for AUD USD. This was the setup we had for AUD USD. No, AUDNZD. I apologize. Now, leading to being triggered, which I want to talk to first of all, because it was a crazy time. We were triggered, or I was triggered, but I think some of you were in it with me. I'm not sure. We were triggered for a while on the 21st of January. You see right there? This is where we got triggered into this chart here, somewhere there. And then the markets played with our minds, left, right, and center. Now, I should have done a better job personally of realizing that glass effect had happened by day 3. By day 3, when market does this, right? I want you to recognize this stuff. When market does this, sometimes it will fall. If you look at our best trade of last year, which was AUDJPY, price would hover on the supply for a long time and then drop, right? So that's why I never jump to assume that it's now time to abandon the trade. I never do, because anything can happen where price agrees. But unfortunately, all these rejections, and by rejection I mean where a candlestick goes in full body like this into your area of value, and then after a while, the next day is just a wick, right? There's just a wick. This is what we call rejection, right? The next day the candlestick looks like this, because really all the selling is happening right now. All right, so there is a supply there, but the selling is taking place as we speak. So we got triggered on day 1, we're on profit the very next day. On day 3, we're not in profit, price came back going up, and then when this happened, I knew it was game over. Now markets tagged our stop loss, but then fell, right? So our instinct to sell AUDNZD. Let's look at the analysis, right? Number 1, price broke out of a bearish structure, so it's risky, but it's possible that price can fall, right? We were targeting a supply there, bearish engulfing, beautiful imbalance, everything is perfect. But when you get to the daily time frame, which is what we used to choose our area of value, I don't know why. It's clearly my fault, but I mean, I'm assuming I ignored it or I was impatient. But look at this. This was perfect, right? This is what I was targeting on the upsell. But it seems to me that price went for the ultimate high. And this should have been an obvious choice for someone like me, or for all of us really, to kind of like go, Leroy, why not just wait for the high? Or rather, you know, have a wider stop with a smaller lot size, right? So that's what price has done now. It's created a bearish engulfing pattern, and it's officially now falling, right? And before all of this, AUD was actually quite strong. Okay, so I'm here because of that. Now, because AUD was strong for a while, the second trade that we got triggered and kicked out of because of NFP and the drama that ADP created. So check this out. ADP happens. What's that trade? Euro AUD. ADP happens on Wednesday, and ADP sends a signal in the market saying, look, man, we are experiencing negative 300 jobs, right? So that's bad for the dollar. If ADP is correct, the dollar fell. You saw the dollar break at demand. It fell nonstop. So what that does is naturally risky assets take over. The dollar is falling, right? So all risky assets are strong. Euro is strong. AUD is strong. So we see there we were trying to sell AUDNZD 3 weeks ago before NFP even came about, right? We would not have known the plan on Wednesday to shift the markets that way. We were just looking at supplies and demands. That being said, it was obvious that even at analysis from 3 weeks ago, I should have chosen even yet a higher supply. Because had I chosen a higher supply, we would be in profits right now in AUDNZD, not caring about the fundamentals. But because risky assets are strong, because ATP has sent a crazy signal in the market, let me show you the date. Wednesday, the date on Wednesday was, today is the 6th, or was the 2nd, Let's go to the 2nd. Here's the 2nd of February. You see that there? Price gets to a bottom and then explodes, right? So that's the 2nd of February, it explodes. So AUD is strong, Euro is strong, etc. The only thing that's going to slow all these puppies down is NFP. If the dollar comes back to strength, if NFP is positive, and we now know that's exactly what happened, right? So while we're analyzing this thing many weeks ago, we're seeing a slight increment. We knew price was going to come up to us. We knew that already. We didn't know about the fundamental dramas and the statistics, but we're looking at this area of value. It looked perfect, clean imbalance. On the daily time frame, this was a very massive Fibonacci level, right? So for price to then come back for retracement and sell. And so we chose the top part here, which is where we got triggered using the H4 time frame, if I'm not mistaken. So many lines, I apologize. But yeah, so look at that. There was a perfect supply in there, perfect imbalance. You know, you couldn't fault this trade. I'm not even mad. I mean, I understand why I got triggered out of it, but this was all perfect. Now, Euro was strong because of what happened in ADP. Then come Friday, all of a sudden, Euro started to cool off, right? Because of a return of dollar strength. Now, I anticipate on Thursday, we'll finally get an answer in the markets about, you know, where to go now based on CPI data. But let me know if this is useful. Like, I think we should have a space where we actually talk about trades that we lose. If we lose nothing that week, there won't be a need for a Friday market review. But I think it's quite important to keep that, you know, in our forefront, because it's what has to go into my trading journal. That's even today still, no matter what, target, please target higher time frames when you're selling and the ultimate low when you buy. All right, so now that I'm done with all of that, and I thank you for allowing me to just quickly, you know, cover and teach on a couple of things. I would then like to start distributing what I think is going to happen on the assets that you guys have chosen. And then first thing tomorrow morning, before you guys wake up, God willing, I would have uploaded the charts that I actually personally wanted to go through. Right, I see there's a lot of drawings I'm trying to clear out. Right, but I do hope that was helpful, man. I had a lot of fun this weekend. I almost like completely fell in love with the markets all over again. And it's because I learned something. I learned a couple of new things as well. Right, so here's AUD, you know, USD. And maybe let me start off on a clean chart where we can draw our own stuff, right? So we've been tracking this for a while. This is an obvious risk on, risk off asset because the dollar is strong, because of that crazy demand, yada, 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 yada. Your risky assets in general should be falling, right? Euro USD has been falling, pound USD fighting the fight, but overall falling. AUD USD falling because your dollar overall keeps strengthening, right? And that's just kind of like how it needs to be. And please, guys, please do comment if Friday reviews are something that you guys want to see. Just quick breakdown. If we lose, if we don't lose, then we don't have to have it. But I do think it's actually brutally important to have it. But I don't want to post a lot of stuff and then no one is around to watch it, you know. Right, and thank you everyone for sticking around. Please don't forget to like the video. Let YouTube know that we are doing some serious work here. Right, so AUD USD on the governing time frame has been falling. We identified why it was going to fall last year, and nothing has shocked us. Nothing, absolutely nothing has surprised us, right? It's just been a consistent drop of price, you know, non-stop. Falling, got to some type of demand. The demand is not doing too well, in my humble opinion. It's probably been removed. It's been removed in the slightest way, and now we're waiting to see. So when a demand is removed, it means one thing, right? Price wants to go down. That's all it means, number one. But how will price go down? Will there be first a retracement to find a higher sell point and then a push back down, or will price just continue to bleed? All right, let's do it What are you guys saying? Let's do it. Oh, okay. So you guys are keen for a Friday review. Thank you. All right, cool. I think it's important because I do review this stuff by myself. But like I said, this year I want to make sure everything is plain on the table. You know, just iron it all out. It helps me think because I am in the final stages of finishing my book, and there's some things that are not in the book that I've realized should be in the book, and it's just literally through war rooms and just creating content around trading. Just give you guys everything in my head, right? So I think price is gonna drop, and it makes sense. Now, last night I shared a spreadsheet with you. I have not edited yet to the Masters Traders spreadsheet. I will do that tomorrow. I mean, I was so tired to like do the formulas and I didn't want to mess up our spreadsheet, right? But when you look at AUD, so let's start off. I'll put the link in the description straight after this video. But to get this data, because remember, I'm sharing everything with you guys. If you want to see it, it's just that it will come out like this raw. And what I'm going to do in the Masters Trader spreadsheet, what I like to do is I like to make things a little bit more accessible, right? So I'll put in percentages instead of order blocks. But if you want it raw like this, you have to come here. So I shared the COT data website. I shared you my FX book website where I get all the data, right, that I'm trying to put together. This is called bar chart. And as far as I know, you don't. What we're doing, you can use a free account. You don't have to pay, right? I pay for other features and all that kind of stuff, but this is really just to get a basic understanding of these COT reports when they're actually paired together. And they kind of like help you see, you know, dollar versus pound, dollar versus Japanese yen, etc., right? And most of the time it'll be a detailed report. When you get here the first time, do a detailed report, and it'll be very difficult to really ascertain. A detailed report, you get to see it, you know, month by month. So I'm going to download the detailed report to break down because we need all this data historically. But if you go to, which is what we're going to do today, if you go to summary report, you then get a look at the most recent COT data available, which was on the 1st of February. All right, so this is a summary report. And then I just simply download and then I get the spreadsheet, then I start to work on it, put it together, etc., etc. So I'll work on this stuff for you guys and I'll put it up for you, you know, onto the Zoom thing, onto our master trader spreadsheet, right? But we can see here, you know, AUD USD, right? The net positions are negative, right? And then the long positions, this is the long positions, 18,000 longs, but 98,000 shorts. So net positions is a combination between the shorts and the longs. And on the table, we have more money selling than buying, like a massively amount of money selling than buying. In fact, if you work out the percentages, probably like 80-something%, all right, on the sell side or on AUD USD. So that tells me to start looking for the signs. It also tells me that it makes sense why the demand has been removed. It tells me that this supply is strong because it took out an opposing area of value and the price is going to settle down there. It also tells me that as if I want to make the most money from this pair, I need to line myself up as a swing to positional trader, right, where I can start to really garner, you know, the advantages of holding a long trade and get all these pips to the downside. Now that I know all of this, now I'm just going to apply simple supply and demand to it, right? And I can see that, all right, fine, this demand here is broken. I want to make sure there's no debating that. And as far as I can tell, ladies and gentlemen, it's a clean break. And then what I need to now know is how far will the pullback be before the sale, right? And you can see already here there was a bearish engulfing pattern. I lie, it's not a bearish engulfing pattern. You see this trick here? Did not engulf, right? It did not engulf. So that's not a zone at all. Okay, I repeat, to me anyways, to me, and the way I like to approach my supply and demand, this is definitely not a zone, right? So I'm looking next. The next one at the bottom, and this is also not a zone as far as I can tell. It's really, it's not, I mean, sometimes they work, but it's really not clean. So let me show you. Bearish engulfing candle, right? Just go old school on Google, you'll see it for yourself. it's got a basic number of rules, right? The pattern has to engulf the open and the close. Let's go here. Come on, come on. You know I'm on fiber, right? There we go. So bearish engulfing pattern opens. What happened? Right, there you go. Bearish engulfing candle opens at or above. So it has to be equal or higher. I like it especially if it opens above. Remember I said red candles open at the top. The length of the bearish engulfing engulfs the previous candle. So now the length has to completely close the previous green candle and closes below that. If this happens, you've got a bearish. So there are rules here, guys. It must open at or above. And so when I'm looking at this, you know, I've seen these work. Don't get me wrong. I've seen these work. It's closed below, but I'm not convinced because, you know, I'd very much prefer to have opened above. But for argument's sake, let's go to the weekly time frame and see if we can identify a supply there. Right, I'm just going to do this. Right, so you can see why. So let's say you thought this was a bearish engulfing pattern, you'd be screwed because it didn't open above. If you're not methodological, it's a trap basically. And you can see a nice big stop loss hunt happened here to liquidify. You know, everyone was waiting there, and then price dropped after that, right? So such stuff you can catch with a sell stop or just not trade it. You know, just not trade it. For me is just generally how I like to operate until I have a clear sell signal, right? So for the most part there, price has broken a demand, which is this one on the weekly. So all of this was a weekly demand inside the monthly demand, right? And price has broken it. So price wants to go down. I'm here, bro. That's me. I would very much love to come wait here. And yeah, it looks like it's going to take forever to get there, but you'll be surprised. Now, given the current statistics out there on the ground with a strong dollar, you know, coming off the back of NFP, it doesn't seem like that's something that markets are going to rush to do right now, right? Markets are under no pressure to impress us at the moment, right? Risky assets are going to fall no matter what, given the current situation with the dollar. So price could continue falling without me. This area of value that I'm very much interested in, I must remember though that it is not an original area of value, right? That it's been caused by something. Why is that important? Because we need to keep track of the glass effect in price. Price has a glass effect on different areas and therefore cannot be ignored. The glass effect on this supply is very interesting, right? Remember, you've got one fresh touch and then two retest. The fresh touch ran up to here, retest went longer, and we know this is literally textbook module 1 in the course, right? So far everything is nice and tight. During this retest, you want to start to lay out, start to set up your trading setup, right? So let's say this is a leg, and it is a leg. Swing high, swing low. Okay, guys, I'm taking it slow on the first two assets just to highlight, you know, some key stuff. There's a swing high here, there's a swing low here, right? This is the swing high, this is the swing low, right? You just want to make sure you're aware of what price is doing. This is why this bearish engulfing pattern was a trap. It looked like price was going to stop there. So anyone who knew a little bit about Forex would have put their stop loss there. It's that retail area of value that I always tell you guys about that I don't like, that 50% mark, because I know retail traders like it. Smart money knows that. So smart money spiked up to try and make contact with the golden fib, liquidating everyone there, which is fine. So our Fibonacci is telling us that they've already done a retracement. That's important. They've already done a retracement and now price is going down. All right, so now what happened in this last week as ADP was, you know, weakening dollar strength, dollar influence, because things were bad in the markets on Wednesday, AUD gained a lot of strength, hence this green candle that we see at the end there. The problem is on Friday, price then changed when NFP came out and then markets all of a sudden started to drop. Now I need a new Fibonacci. The first one I drew was on the weekly time frame to understand the bigger picture. I now need to draw a Fibonacci on the smaller time frame, on my daily time frame. So if I did this on Wednesday last week, if I was in the markets on Wednesday for AUD, USD, all I had to do was draw a Fibonacci. This is Friday, this is Thursday, this is Wednesday. So just before ADP dropped on Tuesday, had I been paying attention, had I known, and this is kind of like something that you guys need to start doing. When there are news events, I don't think you should trade the news. I personally, I don't really believe in that hype. Unless if you've got perfect trading psychology, I think you should prep for that, right? So on Monday, looking at this chart, swing high to swing low, you would have noticed that there is a bearish engulfing pattern right there. All right, clean order blocks, very perfect. This is nice, you know, and it matches your golden ratio area. This is on the 31st of January. 31st of January is on the Monday. ADP is on Wednesday. On the Monday, you'd have noticed that the only way for this retracement to work is for the markets to receive news that would give it strength to get here. The only thing that could give AUD strength over the dollar is bad news, therefore bad ADP. Right, so I would have put a sell order there and looked crazy. Price would have gotten in and now would be in there in profits, right? I'm not in that trade. I've got an AUD USD pending order, but I'm pretty sure, knowing me, it's a little bit higher. Right now, markets have come full circle, hit a supply and come back into a demand. Personally, I'm doing nothing about this trade. I have no intention of buying with price, although that is a good place to buy. Like I said, I am actually waiting for price to climb up here. I'm actually waiting for price to climb up here. I can see that markets have been very busy, all right, somewhere here. This is actually a doji candle, the red candle, so you know the rules when it comes to doji candles, right? So there's been a supply there. You know, I would far much more rather still sell at a peak supply, maybe risk a little bit here, but it's a PCP, so no, because you only get one touch. Right, so some of you will see AUD USD for now looks like it wants to go up, right? Despite the fact that we are all assuming we're going to wake up to a strong dollar this coming week, AUD USD on a scale of things right now looks like it wants to go up. What could happen, however, is price could get up to here as markets slowly but surely start to create a sell ladder effect. Price could get up to right there and then fall. All right, so that to me would make it's almost the most sober thing to happen is for price to get right up to that bearish engulfing pattern, which is a perfect bearish engulfing pattern, and then fall. So in the interest of taking risks, given the fact that I'm risking very little in the public accounts, I wouldn't mind taking a short-term sell here. Short-term sell, and then if markets are very serious about selling, and I'll know that they're serious about selling based on how they deal with this demand. If markets remove this daily demand, because this daily demand is what removed the monthly demand, if you guys remember, if markets remove this daily demand, all I'm going to do to my sell is break even and hold and hold up until we get all the way down there. All right, so and if this trade doesn't work out, I ain't going to stress about life. Right, there's the situation there, but I guess the area of competition is somewhere here. But it looks like price could even come and tap there. But if this doesn't work out, like I said, my main sell is all the way up there. It's just that this one might not happen anytime soon if there are enough sell orders here. And I think they are. I think they are, given this situation, AUD USD. I think there are enough sell orders to wait there. The sell orders were put in on the 1st of February. All right, so it's something to just be very mindful of. So when price somewhere here on the 1st of February was very bullish and strong, they were preparing to sell. Some orders immediately turned price. I'm sure there's a better sell opportunity somewhere there. So AUD USD, I'm going to hunker down there on Saxo. Now let's just go to my real AUD USD setup. Oh, look, it's the exact same thing. I've got the exact same thing. So this is the order inside the master trader spreadsheet, right? You can see I want to sell there. I'll show you on Saxo what I just did. The difference is on Saxo, I'm using a daily area of value, right? But on my traders plan, I went deeper. I went into the H4 time frame, right? And then I did something like this. And I was like, oh, okay, fine. I'm going to take that area. Why? Because I don't like this sell. I prefer to sell all the way higher there. And because of that, I'd rather limit my area of value, sell at the ultimate highest point, number one, which makes me very close to my stop loss. So instead of risking 50 pips on this area of value, I'm probably down to 30 pips or 20 pips, which is 10 times much better. All right, so those are my thoughts on AUD USD, and you guys already have this pinned in order. 365 students, that is, it's already up in our remote course if it's marked up like this, because this was part of my private trade plans just after war room number 47. So it's marked as private on the master trader spreadsheet. I am waiting to take a sell there. All right, so I've already marked this up. Right, moving on. Pound JPY. Hey man, my therapist said I must stay out of this. Excuse me. My therapist told me this is not my friend. I lost 547 last year, and then $800 US, and then broke even after holding profit for about 1.2. Price zeroed me out. So this asset wasn't my friend last year. It really was not my friend. Right. So let's break it down. You know, I don't mind. You know, maybe I can redeem myself here, but for the most part, I see we're extensively talking about this area of value. I clearly want to sell somewhere in there, but let's not use old notes. Let's reconstruct everything, right? So this is perfect, right? So as usual, governor to governor. I think this is a perfect time to tell you guys, those of you who are not part of the academy but want to join the academy, it is officially the big 50% discount is over. All right, but we were, yeah, my team says I'm too soft, or I don't know. And I understand, you know, like there are the team that helps me run the actual academy, they're not traders. The traders I use for my flow trading. So my team for the academy, they're people who help me not run a business always with my heart, because I've been taken advantage of, and I know they're right. That being said, even though we want to remain as cheap as possible, we also need to make sure that, you know, it's well worth doing, like it's worth our time, right? So there is a payment plan for those of you who haven't joined but don't want to pay the full fees or whatever it is. There is a payment plan that you can use. And unfortunately, that's just going to be how it is until the end of the year. So the payment plan is extremely generous. If you pay up front, you still get 25% off, but you can pay in months, you know, just in case you think I'm going to run away, right? For those of you who are joining, it's easier for me to make these announcements than to respond to inboxes, because I'm bad with that. Right, so we've got this governing demand here, check. We've got a fresh touch here, check, and we've got a problem. This is a problem. It's not really a retest. It is a retest. Markets did go down for months. I don't even want to lie. It was beautiful for months, but price has come back, right? So when price comes back that quickly, and I say quickly because you really would have expected this to have happened by now, right? When price comes back like this, then you got glass effect problems, because now all the money that is meant to be used to be pushing price down from that supply is actually being used to sell off these rallies. One green month, one red month, one green month, one red month. And the more sells you use to push price down, eventually this area will fall apart. Pound JPY by nature is an extremely sell profile asset, you know. See that there? It's an extremely sell profile asset, right? This is literally all it has ever known from the beginning of time. We talk about these profiles in module 1. You must know your asset 100%. But what we can tell, and this is interesting, right? Look at this. Let's draw a Fibonacci from that peak there. I'm just going to use the biggest swing high, swing lows. See that there? Golden area from there right to there, swing high, swing low, like that. That big leg from, you know, the 1990s all the way to 1995, at that time when I was just 5 years old, and I thought I was going to be a policeman when I grow up. I did not think I would be a financial markets practitioner, right? So that swing high, swing low, they worked for the first 5 years of pound JPY. Now let's look at the second one, from the touch of the golden area to the bottom there. I'm just going to draw across. Isn't this amazing? Like module 2, module 1, like this stuff, guys, is golden. The stuff is golden. Look at all this rejection here where price just sat there for years to come, right? And so this then exploded, right? Perfect. Pound JPY from the beginning of time. Now, this was from 1998 all the way to 2009, right? So again, moving well in line. And then finally, not finally, but let's look at this swing high, swing low. Gotta draw it accurately, right? And the swing high, swing low is obviously this all the way down to that, right? So swing high, swing low there, and look at price aching just for that golden ratio area, barely missing it because of the complicated 365 candle. So that's a big supply, right? Done there. All right, cool. So all it's like as an asset, we can trust supply and demand. We can trust supply and demand plus the Fibonacci. We know that this is what the banks do. So when we look at where price is now today, we then need to quickly find the right tool to use to assess it. I'm saying this as someone who's actually lost this. I lost this asset more than anything last year. I had 4 losses to pound JPY last year. One of them wasn't a loss, it was a break even, but I had been holding a lot of about 1.2 before I got stopped out, right? So it wants to go up and fight its nature. Now the final swing high, swing low is obviously this one. And this is where we have a problem, because price, from what we can tell, wants to always use the golden ratio area, but there was an order block in the 50% mark, right? And there's a high chance that over time this will get broken, right, to this side, and there's really nothing to stop price. When that gets broken, it's my opinion that price might as well not retrace. If that gets broken, I repeat, there's no point. There's really not much to retrace for. It might as well just complete its full leg up here and then start to drop if it wants to drop, because all we've had since COVID 2020, March of 2020, is a push to the upside. And the reason why pound JPY is different from all its risky assets is JPY is a safe haven. Because it's a safe haven, their deal is you need a weak currency, because JPY loans a lot of money to the world, countries, traders, banks, etc., at a low interest rate. That's how that country makes the most of its money. Now, because of that, pound versus a weak currency, GBP, versus a currency that is designed to stay weak, right, will always have the upper hand. It will keep pushing up. So that's why I think, I need to throw out my playbook and just remember, the things pushing this thing. Let's look at the Japanese index for 2 seconds. You can see JPY is weak, stays weak, always weak, drop, 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 weak, 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 weak. Right, it's broken a trend line. JPY is going to remain weak, man. We might as well just jump onto the buy side of pound JPY, right? Because this thing is going down and will keep going down for a very long time, at least for the next, half of the year, right? For the first and second financial quarter. And if you look at the British pound index, as an entity by itself, number one, but also against other currencies, right? It's got this ugly thing going on, man. I didn't like this, but there's a way to zoom out a bit, but it's actually quite a terrible chart to read, and I don't know why. So I'm going to stretch this out a bit. There you go. So if you look at the pound, right, it's got a dilemma, because in general it must follow the direction of Euro USD. Euro hit the supply, pound hit the supply. Euro once upon a time had a demand here, and then Euro went up again and then came back again. Pound has hit the demand. Currently it's trying to go back up. When it went back up, very carefully, it seems to me that we needed markets to decide, is this going to be a bearish engulfing pattern? Are you going to use this as a bearish engulfing pattern? Because the red candle did not open above, right? So there was this pattern going on here, and I couldn't make up my mind, nor could I make up the market's mind. So I decided that there was no order block there, a valid one, so to speak. Now we can see that when price pushed back into the zone, right, it created a long wick. So there were sellers there who were anticipating a sell. Now markets are feeling that. We call this market inefficiencies. They're feeling this area of value. So price might actually cover this body. I am entirely not sure. But for the most part, pound is still steadily on. If you look at euro, euro is already very close to this monthly demand. It's very, very close, like a whole different picture. But we know euro leads the way. All right, look at euro, right? You see there? Boom. Euro is already making, you know, PCPs and interesting patterns as price is approaching the down. Is this a bullish engulfing pattern? I don't think so. To me, it's not, right? It's definitely not. Bullish engulfing pattern would have to do the opposite. Bullish. Let's type bullish here. It's a slow pace war room, guys, today, but you know, I'm not really teaching live classes, so I'm a little bit free. I hope you guys are okay with that. I see bullish engulfing pattern, same rules. We have to cover below, gap lower, open above, right? So we don't have that here. So don't start seeing this and start to think euro is going up. No. Euro is in the short term strong, because in the short term, for the first 6 days of February, dollar was weak, right? And again, it's the same concept with the candlestick that I showed you earlier on. That what do you do with the candlestick this big within the first 7 days of the month? Where else is it going to go? It can't get any bigger. So what's going to happen is your candlestick is going to close looking like this. You're going to get the big wick down or wick up. Either this body must shrink this way or shrink that way. You know, one of the two. And for me, there's a higher chance that it's going to shrink this way to the downside, right? As we continue down here, right? Euro is weak, but we'll get to euro as we go by. So back to pound JPY. You know, pound, you know, yen is quite weak. Price is pushing up. I would like to buy. I think I'm done trying to sell this thing, but I am going to be very anal about where I buy, to a point where it will almost feel like I don't even want to trade it, because I don't. Right? Remember, December, I got to sit down with my own mentor. It was my first time flying out of Africa in a very long time since COVID, to really sit down and get the type of coaching that I need. And when we looked at my reviews on this chart, it's just evident that selling it is not good for my psyche. So if I'm to buy pound JPY, guys, I am talking like a bottom. Like, I'm literally looking at these areas down there. I need price to really commit to coming down to me, personally speaking. Otherwise, in the public trades that were taken, it's important that every single trade that's in there I have to take. Otherwise, it's just not fair, right? So you'll see I missed the buy because I was very bearish. I mean, I am bearish in the short term, but there it is there, reached the 50%, came for this demand, broke the demand, and then retraced up. Right now, there's a high chance that this thing is going to fall. And those of you who are risk takers, I implore you to take advantage of the fall. I have no interest in the fall. All right. I have no interest in the fall anymore, because if I get into pound JPY and the fall doesn't work, because there's a lot of money in the sell. The sell, guys, the sell side potential is ridiculous. For this chart to maintain its profile, sell profile, so to speak, there's thousands and thousands of pips on the sell side. I just don't know if they're going to operate, right? I don't know if we're going to get it. Because if price was to fall here, there's nothing catch it except all the way down there. All right, that's number one. So if I'm to buy, I'll catch a very short-term daily demand to daily supply. So that's a short 1:3, and I'll show it to you right now. If I am to sell, I only want to sell inside this zone. So we're going to talk about that right now. So I'll show you the two places I want to take trades. This is weekly. I want to do nothing here except if price comes daily. Sorry, guys. Let me just remove all this stuff, man. All this stuff is in the way. All this stuff is in the way. All this stuff is in the way. All right. Okay, so sun is in my face. It's that time of the day where the sun sets into the office. Quickly, right? So I would look for a play here if I am to buy, and it will be a very short-term buy. Okay, it'll be a very, sorry, I'm just closing the curtains. It'll be a very short-term buy. Personally for me, because I don't trust it. I would assume price is going to retrace against me sooner rather than later, right? So this is a speculation. Let's see what it looks like on the daily time frame. Yeah, on the daily time frame. I would absolutely take a short-term buy there, short swing term buy. I don't think this area of value is going to hold. I think people are going to be trapped here. I don't think that's going to hold at all. And because of that, I would not want to be involved. I would then wait to buy right there. Okay, that's pound JPY. I'm happy to put a pending order there to buy there. I have no problem buying there. All right. I don't like it, but if I was to be forced to take this trade gun to my head, I'll take a buy there. What would be more nice is if this trade had some type of weekly confluence, and one would argue that it kind of does. It kind of does. All right. It's not the best, but it kind of does. So I'll take a buy there. And my exit for this buy will be based on where the next supply is. When price starts to fall, price is going to be creating supply. And if there's 1:3 between the supply, so what I mean is, as price is starting to come down here, price is going to do something like this. And one of these things that price is going to do is going to be the new supply, the immediate supply. So if there's an immediate supply there like that, and I have a 1:3 from my buy, then yes, I will take the buy here. But the buy is not a forever swing trade buy. It's just a short term to make contact, because only when they drop now and create these types of supplies will I know that what I wanted to see last year is now happening, that they actually committed to go down. That's the buy. However, on pound JPY, I also acknowledge that there are 55 better sell places, right? So this buy could be the one that pushes out there. So the only time I want to sell, and I've already marked it in this chart, is all the way up there. Otherwise, guys, I really don't want to do anything in this chart. It's really not for me. It is not for me. This chart does not love me. It was not designed for me. And so I'm in here. So in here is that monthly area of value that we saw. Inside here is that weekly area of value that we saw. And I would like to sell inside there. Just want to see what it looks like. I hope I'm coming across clear. I mean, it's not the best review for pound JPY, but just to maintain peace in my mind, I hope I'm coming across clear. Yeah, so what I hated was, look at this, a massive doji candle, right? So, and you can see, you know, peak supply and fresh touch already happened, right? So I'm thinking fresh touch has already happened. Awesome, because we know the rules. The rules are, once fresh touch has happened, you know, the retest runs in deeper, but when it falls longer. So this whole yellow area is basically a big holding place for me. Small lot size and a whole lot of patience is all I need, right? Because it's actually manically massive. But if you use the daily, I would suggest you kind of like cap it like this. I'll show you. If you don't have a big account, because the retest always runs in deeper to the zone anyways, I would suggest you hold the area of value like this. Come on, it's taking forever. Right, so I would suggest you do this. You have a sell order up here. Right, so something like this in the long run, which is still at par with golden area of value, MTA, weekly, daily, etc., etc. So that's what I'm going to do with pound JPY. I hope that's clear. I can hold and wait. If the supply here is not strong, not valid, if the supply that they have up here is looking very weak, it looks like a trap, then all I'll do is, for my buy, I'll just break even. I'll break even and hope the trade runs. If the whole trade runs, I'll just hold it. I'll just keep holding it up until we get to this supply, where I'll be triggered for a sell and then drop. All right, but if the supply looks strong and is valid and the imbalance is there, I'll just take profits and call it a day. Okay, hope that makes sense. Right, the next chart we're looking at is EURJPY. We already know that JPY is weak, and we know that euro, for whatever reason, was strong. Right, so this is nice to see. I remember leaving this in here, right? So with EURJPY, obviously you guys saw, everyone has my trading plan and my trade, so you know that these were not trades taken. This was just me marking up stuff. I don't know who I was teaching, but I was just showing them, you know, the tough factors of life. So this is on the H4 time frame, and really the story of the arrow that I want to repeat. If you don't see a distribution and you see a straight shooting arrow like that, it is going to break through everything, right? So this is what price looked like, before ADP announcement. ADP is on the 2nd. This is on the 31st. This is Monday. So if you woke up and looked at this on Monday in the markets, right, you would think, good, this is a beautiful place to take a trade. I mean, look at this, right? Beautiful imbalance. It doesn't give you risk 1:3. So that's one of the reasons why I didn't even bother with the trade. But the setup looks dope, right? You've got clean imbalance and prices moving up. And then you think to yourself, it's a trap, right? Sell high. Why would price take this supply when there's a supply higher, right? And then you have a good risk reward ratio area. I won't lie, I almost took the sell here. I literally, this one I wanted to take because in my mind, right, this is not a good sell, this is a higher sell. You would not believe that had we not done a war room, whenever we did the war room, there was a long war room a long time ago where we put sell here, where price was supposed to come all the way up here, all right? And that's what markets chose, believe it or not. So this is what it looks like on the daily, where price looks like this Monday, this past Monday. And then all of a sudden, if you correct this to the daily time frame chart, this is I want you to understand this. So when we say markets will use news as a catalyst to what it wants, price literally ran into a war room, supply and demand. I don't remember which one it was, but we spoke about selling somewhere up here. None of these were in our plan. And look what happened. ADP, blah, 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 drama. Price just shot through. And I think one of our students was Kakoma, was saying, look, man, this week taught him the power of confluence. Now let's look at these trades now that they've happened. There was not even a daily confluence with that H4 supply. So no, don't take it. This one would then have been the first supply to consider, right? I just want to be very clear about this because it's very important. Because there was no confluence on the daily, that H4 supply is a waste of our time. It would not have been part of the plan. Which means when talking about the plan, the real plan would have been trade number one to consider would have been here. But if you recall the previous war room that we did, if this is supply number one to consider, then you do the maths. Where is the next best supply? And it's here, this one here, the one that we marked out. Unfortunately, I have no idea why I haven't gotten around to put in a pending order. Because we didn't look at EURJPY in War Room 51, and it's not in War Room 50. All right, so a part of me is running behind on my pending order list. So I'm not yet triggered. But if you're in this, I would hold and pray. To me, this makes so much more sense now, right? Price has arrived, taken out these areas. The only thing I don't like about this is the lack of distribution, right? But if it is gonna work, then you're looking at that bottom there, something like that. I'll go down to smaller time frames to double check for you. But this is, yeah, there's really not much. I can't see, because if price rejects this area, despite the not so clean distribution and goes any higher, then markets have a different plan for risky assets in general. That's what that will mean. Because remember, the reason why Euro is going to buy and maintain continuous buying is because JPY is weak. So what we now need is for Euro to also be weak, right? So we need a weak Euro and a weak JPY so this asset can keep going down. And a weak Euro is based on more sell side or a very strong dollar. So that's what we need a very strong dollar this week. And then this beautiful trade here should take shape, right? If we go to the H4 time frame, you will see markets did distribute a little bit when they were entering the zone. All right, a little bit. So that's better. A little bit of sideways trading as they were entering the zone, and markets did close a little bit, trying to create a bearish engulfing pattern on the H4 time frame. But the question is, inside that daily, which is what we're looking at right now, has price hit a good H4 supply? Because that's all. Okay, no, right. So I could still put a pending order here. So when markets open on Monday, tomorrow, God willing, I'm going to decide to sell here. I'm busy. I've got a 9 a.m. meeting. I really hope I don't miss it, because this could be triggered in the London session or in the New York session. But this would be ideal. So if we ever miss the bus completely, because I know on the daily price is already triggered on the daily and price is already turning. But if markets can, slow down a bit and not operate at this level, red candle, this is a full bearish engulfing, situation. And if whatever happens tomorrow, Monday, Tuesday, price can find an H1 order block, something. Talitha area here, right? And then price holds this area for a touch there. I'm happy to sell. I'm happy to sell here where I've marked. So it's inside the daily using an H4 time frame. I hope that makes sense to everybody. We're just keeping it simple as possible. You can see it's quite a contentious area to sell though, because of the number of rejections that happen on the supply zone, but the imbalance is beautiful, etc. And I'm pretty sure we've passed the retracement area here. All right, so that's EURJPY on the bag. All right, done. Somebody asked for Ethereum. Those of you who took the weekly demand that we spoke about last time, right? Remember, Ethereum didn't bounce off a daily. Let's talk about something cool. We'll talk about it now. Ethereum, Bitcoin are being very naughty, man. But for investors, if you bought here to invest, like for your wallet and hold, forget about 10K. If you're an investor, I'm not talking to traders. I'll talk to traders right now. Forget about Ethereum touching 10K. That doesn't matter to you anymore. All right. I'm supposed to do videos on market cycles this coming week, and I'm supposed to do a crypto overview. Forget about 10K. Your target is $20,000 US. I'm telling you this in the middle of a bear market. I have never been wrong. Not that I can't be wrong. And let me just quickly correct myself. I have been wrong, right? But not about this kind of stuff, right? Now, Kathy Woods thinks Ethereum will do 167,000, and she's known for these crazy numbers, right? These are crazy numbers, but it's up until 2030, which is very, very reasonable. Everything that we're seeing, NFTs, nodes, metaverse, most of this stuff is being built on Ethereum networks, right? So what you think is going to happen? Like, it's entirely dependent on this stuff. Web3, like it's absolutely crucial that if you took this weekly demand that I showed you guys 2 weeks ago when I did a war room on crypto and other assets, then please hold, right? For traders, I couldn't get a good daily touch, so I'm not in it in my trading accounts. And number one. Number two, if I'm to talk Ethereum, then I must go to the slave master Bitcoin. I must go to Bitcoin. You see, Bitcoin did the exact same thing. It touched on the weekly demand, right? The one that we spoke about the last time with the war room on these crypto assets. And I like how these war rooms happen every week. And every week we're damn accurate, damn accurate. I mean, it's absolutely encouraging, right? So now when you look at this weekly area of value, I told you guys there's a head and shoulder pattern on the daily time frame, but we'll get to that later. When you look at this weekly area of value, there are a lot of things to remember. Number one, that it's marked red. And when I mark an area of value red, it's been violated. It's a broken demand. The price has been pumped up here by retail traders, man. People who are so scared of losing their sense of net worth. I have been consistent with every single one of you, and I maintain it. Right, I've been laughed at, I've taken screenshots, it's not my first time doing this stuff. That Bitcoin has every desire to get to 12,000 US dollars. And when it does, I can't tell you when, I can't tell you why, but when it does, oh my goodness gracious, what a beautiful, beautiful day it will be for me in my world. But before we can deal with 12,000 US dollars, if it's ever going to happen, there is a strong area of support, but specifically an actual institutional demand at 20,000. Now, when I look at this coin, and it's linked to Ethereum, I think bro Trevor asked me to look at Ethereum, if I'm not mistaken. When I look at Bitcoin, with all these arrows and all that kind of stuff, I think I taught you guys some stuff on the public Telegram group when I was drawing these arrows. This is the weekly, all right, see it quickly, and I'm going to remove this and I'm going to remove that, right? When I look at Bitcoin, I do believe institutional supply is at play. right? I'll need the end of this week to be proven wrong, right? If institutional supply is not at play, remove it, right? Retail traders, put your money up where your mouth is and remove it. If you want 100,000 US dollars, sell your house, sell your car, tell your granny, and tell everybody to cancel their life insurance policies and put it in the damn coin so it can move, right? But because we're not all going to do that, because it's not smart and it's not financial advice, and that's not what I'm telling you to do, I guarantee you that I don't think there's enough money to sustain this. This to me looks like a perfect sales setup. Now, I don't know if you guys know how to track these things, but I can tell you last night when I went to sleep, 50 million shorts were liquidated yesterday in Bitcoin. 50 million people, no. And a certain number of people lost 50 million US dollars who were shooting Bitcoin price down because they were shooting with the momentum. I think Bitcoin is going to go down in the next 2 weeks. That's my personal bias. I think, and remember, I am a staunch Bitcoiner. I am a staunch cryptocurrency. I am all for crypto. I am not negative about these things. But as someone who runs corporate accounts, my clients don't care about what I believe. What they care about is how they can make money in such markets. And I believe, if you look at it carefully now let's look at this. Bitcoin hit a weekly demand, but let's do a clean multiple time frame analysis. Where is the daily demand? There is no daily demand. This thing is literally feeding off the fear, right, of market. So it bounced off there. Is this clear? Is my screen clear, guys? Or is, I'm using StreamYard and I'm not sure. I'm just gonna change a few things. Is that better? Maybe that's better. I don't know. You let me know. Right. So, and please do let me know. It's so important that the war rooms are productive and great for you, etc., etc. Right now, it hit a weekly demand. It didn't touch a daily demand. 365 traders, that's important. That without a clean golden multiple time frame analysis, we are doomed. Now, if you do the Kinihashi candlesticks, that's why I've drawn this white line there. You can see that price almost, it tries its best. It's level best. Let me remove this yellow dot there. Almost tries to tag this white line, but it just doesn't. It really doesn't. If you use normal candlesticks, it's so much worse, because ideally the real order block is nowhere close to this thing, right? It's not how we draw bullish engulfing patterns, right? If you want to draw a bullish engulfing pattern, after it's created a strong demand, you're going to choose an area of value that looks like this, which is why, I've already put out a note to corporate clients. I wouldn't be surprised if we are to rebuy Bitcoin at 30K. I think Bitcoin is coming back to 30,000 US dollars. Now, I can't say that without people trying to throw stones at me as if I control these markets. I don't control the markets, but I don't trust this. I'm not sitting here and thinking, great, the bulls are back. I don't see it. And number two, when we get a head and shoulders pattern from a technical perspective, right? And just so we're all clear, here's a shoulder, here's a head, here's a shoulder. The extension is generally longer than this, right? So this is at play, in my opinion. Clear. All right, thanks, guys. In my opinion, kill me. Remember, for me, Bitcoin, it's a 10-year game. And every year I add another year to my 10 years. So I've been saying Bitcoin for me personally is a 10-year game since 2019. And that's because I liquidated most of my crypto in 2018 after I made a lot of money. And then I was like, damn, I should have known better in 2018. So I've been trying to buy and accumulate a bit more. But honestly speaking, I don't care about Bitcoin until 2030. That's when I'll be like, all right, cool. What can I do with this? It's digital assets, it's property. So every time price drops, I'm not emotionally attached to it. What I want to see is price to drop again, because nobody cared enough for me in my dumb years to force me to beat me up and see the truth. I should have bought more than I did. And when I sold 60% of my Bitcoin in 2018, somebody should have been in my life to beat the crap out of me and tell me not to do that. Right, so now all I'm doing when I look at charts is I'm hoping to God for a miracle to give me a chance, my last chance to do the right thing and to buy. That's why I always have a 40% cash reserve. If 30,000 doesn't hold, 20K is at play. Now, I want you to see something interesting. I'm going to open it here because I know there might be some people who are not part of the academy and they're never going to see this kind of stuff again. Just if you can just give me 2 seconds while it opens in the background. I'm going to open you our remote course, the 365 remote course, because I've already made updates to it. Like I said to you guys, as of yesterday, I was working my butt off, and every single spreadsheet in there is up to date. Every single spreadsheet in there is up to date. And I told you guys last year, those of you in the Wealth in 3 Years program, my only note to you in October stated quite clearly that my money is gonna be, I always buy Bitcoin, right? Because that's a must. But my money was gonna be edging more towards Ethereum because the supply for Ethereum is extremely limited. There is very little supply compared to Bitcoin. And because of that, Ethereum is going to be a nutcase winner. You make more. Look at the market cap and all that kind of stuff. Ethereum is bound to outperform Bitcoin because of all its applications, right? Nothing can beat Bitcoin when it comes to being a storage thing. But if you look carefully at the master trader spreadsheet, which I've finally found, I'm pulling this from our remote course. I want you to see something interesting, right? So when the world was falling apart, Nasdaq, you know, and all those assets, Apple, Google stocks, blah, 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 the stock market in general, as it lands, something happened to Bitcoin that no one is talking about, because we understand that with the introduction of smart money into the crypto space, they have one job, and is to push price down. That we know. We're not stupid. We know that no institution is going to want to buy Bitcoin at 65,000 US dollars. Tomorrow or Tuesday latest, I'm going to release a video on what I think Biden is going to do to crypto on the 8th of February, right? So that's why I'm waiting to see. But on the 1st of February with COT data, Bitcoin futures, where institutions are influencing crypto, for the first time, the net positions of banks and hedge funds were positive. For the first time ever. It's so crazy how this stuff comes together. For the first time ever, I mean, since September, look at this, in September, it's been negative. So all of this happened. Now, red. Only this week there, where hedge funds were a bit more bullish than ever when futures was announced October, November. Sure, we had a little bit of green on the table, but this thing has been negative ever since. But it was the first time. It was the first time ever where there were 141 net positive positions on crypto. Now, what that could potentially mean is there is a miracle that's about to happen where, you know, smart money is like, you know what, let's pump this thing up. But if you look at the remember I designed a sentiment indicator for everyone. 50% long, 49.6% short, right? It's like that thing. They're still playing games. There's no imbalance. They haven't shown which side they're going to, but it almost feels like it was so important to ensure that they are net positions this time around. And I suspect, honestly speaking, I absolutely suspect that, and if you see here, all their longs were, all their shorts were bigger than their longs. It was just last week where for the first time ever, their longs were slightly bigger than their shorts, maintaining a 50% long, 49% shorts, putting 141 positive orders. But overall, the sentiment indicator shows they're still bearish. And I suspect, as I keep trying to say, that it was for this pump here, this simple pump to the upside. And I don't know, guys, this whole week, every time I'm assuming that things are going to be this too easy, I do the opposite, and the markets prove me right, and the markets also do the opposite. I don't think price is going to pass this area. If it does, that's cool, you know, but I don't think it will. I think there's an institutional supply. What I like about Bitcoin touching a weekly demand is it reminds me of Nasdaq. And I want you to see why a lot of us are very much focused right now on a crypto overall stock market big correction. Now Nasdaq, the nice thing about Nasdaq is on the weekly time frame, Nasdaq is a very beautiful formation, right? It has broken out of channel 1 and channel 2. but by a little bit, but this big, doji candle here is perfect. But Nasdaq also just kisses its weekly demand and goes up. All right, so the problem is it also makes contact with the weekly supply. I don't know if anyone has even noticed that Nasdaq has actually made real contact with the weekly supply. It left a demand. Right now, price is coming from a weekly supply. All right, and that's something you want to really, 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 take, notice of, and how it is, possible that a crash could be coming, a very big crash. There's a doji candle, you would have to draw it like that. Price made contact. Did price make clean contact with the weekly demand? Not really, right? Look at that. You have to just kind of like take everything with a pinch of salt right now. But I do suspect a strong hand in market manipulation. And because of that, I'm buying a whole lot of Ethereum at the moment. When price came back down, I bought quite a bit. Now I'm waiting to see what's going to happen. I think this is going to drop. Now, when it comes to Ethereum, ETHUSD, finally, to just give you guys some talking points, you can see on the weekly time frame, exact same setup with Bitcoin. That's why I went there first. The reason for that is there is no COT futures report data that I know of for Ethereum. So I always feed off Bitcoin. When Papa Bitcoin goes through a bear market, the classics drop, altcoins die, etc. When Papa Bitcoin starts to resuscitate, altcoins boom, etc., etc. Now, this is interesting. And Trevor, man, I noticed in the private group, you had a lot of crypto questions. I'm going to read them tonight and then answer them tomorrow. I don't know if Trevor is even watching this. I don't even know if he's around. But I saw in the private group there were questions around crypto. I will sit on them tonight and watch. Right. So I bought a lot here and then starting to see more, and I'm going to wait. I'm going to wait until this weekly area is removed. I don't know if it's going to be removed. I think, price could continue down. I think a green candle could form here. Price needs to be relieved a bit. Okay, just a little bit of relief. I think this is a very strong weekly area of value. I think if you're buying here, hold Ethereum containers, hold till 20,000, right? Literally, I thoroughly believe this. I can't tell you which year, when, what, but I do believe 10 days no longer a problem after this massive correction at the all-time high of 4,000, because we went halfway. We broke that into half to like all the way down to like 2,000, 2,100. That's just too perfect, which means there's now a lot of room for the upside. Now, this is possible, but I do feel like there's still the danger to sell. And if you come to the daily time frame, you will see price can still negotiate a little bit with you, and then here you're in trouble. So if you're in a buy trade, you hold. This clearly is a PCP to the upside. There's no doubt this is a PCP to the upside. If they use it to tank, it's only because Bitcoin is going to start tanking first rapidly. But right now, this is a PCP to the upside, almost protecting the progress made, right? So you could get something like this to the upside, which would be good for those of you who want that. I am more interested in something like this. Right. Now, just like NFP, if Biden doesn't cancel on the 8th of February, which is 2 days from now, just like NFP, all right, markets are about to approach a zone that has existed since the 16th of January 2022. So when the markets move in 2 days' time, it won't be because of what Biden said. 365 traders, this is my whole point of our course. There is already money in this area of value. You can see price here. This was once upon a time a green candle. You always can tell. It started off as a green candle and then it became a red candle. This is a fresh touch. Price went green to get sell orders and then sold. You don't believe me? It's easy to prove. We just have to do a replay. Go back in time. You will notice that the candlestick, I don't think it starts off red. If it does, cool. But normally it does not start off red, right? So which means, and that's important for us because we need to know if we can trust the area of value. We need to know how many orders are in there, right? So I'm just going to do a slow replay. Oh, I didn't even notice. Sorry, maybe you guys saw, but I was busy trying to look for my mouse cursor, right? So I'm going to slow this thing down in case I'm wrong. So it's green, or sorry, red, I apologize. It's so quick, it's red. I have so much doubt. I'm actually quite shocked that it's red. Allow me please just to brush my curiosity to do this and go to the H4. There had to be a rally in. Yeah, I knew it. There always is a rally, a very strong push to the upside. You can see that rally right there. And then all of a sudden, markets sell off like this. This is institutional money, right? This is when whales really just want to tank price, which is how they started the year with Ethereum. Now, I'm saying to you that given the stakes of the crypto markets right now, regulation, India agreeing to keep crypto but a 30% tax levy put in play, this is a very interesting order block area of value for price. And price is like this 2 days before a very big meeting. And I'll double check the dates, but I'm pretty sure my report said on the 8th. Now, if markets jump ahead of the meeting into this area, I would be very scared, right? Because then I'd assume that price is just going to plummet. But if Biden says very positive things, which I don't know about, right? I don't know what he's going to say, then I'm sure we could break a supply and then use this Talitha area, right? We can use this Talitha area like that as a place to land and continue to the upside. All right, it's just thoroughly based on what these Democrats want to do with people's money and how badly they want to tax Americans, etc., etc. And my thoughts around it is they don't care about individuals, they care about companies like Binance, Coinbase. So what I'm pretty sure they're gonna do is they're gonna push heavy regulations on those companies for KYC documents. So they're gonna want your ID, your address, who you are, and how much you're keeping. They're gonna want those companies to be transparent with the government about who the crypto whales are, who the crypto individuals are. And a lot of people don't want that. A lot of people use crypto for the very sake of that type of anonymity and breaking out of, you know, the banking system. So it's going to be to each financier, you know, crypto financier to kind of like make a decision on the way forward. Otherwise, they just shut them down, you know, and no one wants that, right? So I think Biden's going to come from that approach. I could be wrong, but for the most, Haley, your screen is showing half. No, I'm not using my phone. What do you mean it's showing half? Half. I'm so confused. Let me kill my camera. Sorry, man, I'm not using I did ask earlier on if you guys could see everything. Cinema layout, is that better? I'm just using StreamYard, a different streaming service. David, is that better? And I know there's a 10-second delay, but is that better? David, let me know if that's better. But I'll just quickly move on. Meanwhile, I'll wait for your comment. Right. So this is what I'm really, you know, looking towards, because I'd like to know if you guys can see my screen clearly, because it's absolutely important so that I don't use StreamYard next time if you guys can't see it. But I'm definitely not using my phone. I have no idea where my phone is, to be honest with you. Right. So I would wait for any Ethereum plays. If you're already in the markets and you bought down here, as we discussed about 2 weeks ago, then it's a good time to break even. It looks like portrait, really. Is that just David, or it's clear there? No. Okay. Can everyone just let me know if my screen is clear? I know David is having slight problems. He's saying it looks portrait. And it's massively landscape on my end. David, I'm sorry, man. You want to do the other? I don't know what to do. It looks very big and clear on my side, but I could be wrong. I absolutely could be wrong. Right. So yeah, Ethereum lock profits, but then wait for a play. You know, you could put a pin in order to sell again here. But you might get burnt if the regulations are positive, right? Because it's going to be a massive pump. People are going to be like, hell yeah, awesome stuff, Mr. President, and you're going to get tagged. If you get tagged, I suggest, you know, don't do anything. Wait for the supply to be broken and let price come back. If this becomes a very good demand, this PCP, sharp. If it's not a good demand, then wait for price to get to a good demand, then buy again. It will come back down. I promise you, it always does. But Ethereum, Bitcoin right now, they're all waiting. Look, Bitcoin got to the supply first, right? Because remember, it leads the pack. It's a primary market. I guarantee you, this thing is going to mess around with everyone's feelings for the next 48 hours, right? It's just going to park there. right? It's gonna park and decide, wait to hear what he's saying, and then it's gonna go. It's gonna either break the supply or drop. But yeah, an institutional demand exists already, right? It was set up as early as the 10th of January. So I don't see this area being broken easily, I want to say. And Biden is like an 8-year-old who probably doesn't even know what DeFi means, right? So it's almost difficult to even see him say anything progressive about cryptocurrencies. We don't expect that from our great grandfathers, even if they are the president, right? So that's Ethereum. EURUSD, man, I was so disappointed with EURUSD. I wanted the rally. It's okay now. All right, fantastic. Thanks, guys. Thank you. I wanted this rally to really match my magic, man. I was strict with this area of value. I was strict with this order block. I was very strict, and you know, I don't want to compromise right now, right? So what I mean is I wanted price to keep pushing a little bit higher. I knew this was going to happen. This is not a new area of value. We set this up 2 war rooms ago, and honestly, I'm going to wait. I need price to keep going up, and for that to happen, I need the dollar to chill. Now, we have pending orders left, right, and center here. I know the main one is somewhere in here, right? So this sell there, that's one. What I would like to suggest, you know, is that we also have a pending order up there. That's what I would like to suggest. And then I want to delete that, and then I want to see what that looks like on the weekly. All of this has got confluence with the weekly. The only problem is no, that makes no sense, right? So I wouldn't do that. I would do something like this, right? So I want to maintain the status quo, which is like this, right? So this for me, so if I was to use, for example, the red alliance, it would be entry somewhere there. And then, you know, first stop loss would be here. So this would be like with a healthy lot size, you know, sizable lot size. And then I'd also have another entry right here with a very small lot size covering this wider area of value. But I'm not ready to sell. This is nice though. I won't even lie. The setup is beautiful. It's like everything, man. Look at this bearish engulfing pattern. Price comes in very strong at the news of NFP. So what I don't like about Euro right now is NFP happened on Friday at like 4. The markets had almost 8 hours to react to it. The dollar gave us exactly a candle that looks like this, right? If you look at the DXY, let's split the screen. Pull up the DXY this side. If you look at the DXY on the daily, it's not like a strong candle leaving that area of demand on the daily. Right? You see? Very similar, man. I'm right. Yeah. Very similar candlesticks types, right? Like, yeah, we kind of like reached a decision. We're going to go up. And I don't like that. I mean, you had 8 hours after NFP dropped, and the dollar was supposed to get the strength. The reason why it's mixed like this is because unemployment went up, and the inflation numbers are going to definitely go up because wages increase. So the markets are like, is this really fully good news? It's good news that jobs are being created. Why the hell did ADP say what it did? Number one, that's market uncertainty. Who's lying, who's not lying? But number two, is it really all good news if we're creating this many jobs, but unemployment is going up? And I can see Euro is like, nah, because I would have thought a massive bearish engulfing candle would have formed on the daily on EURUSD, and a massive bullish engulfing candle should have been formed on the DXY, but that didn't happen. So because of that, I looked at this and I went to sleep on Friday night, and I didn't play it. I actually did not take a trade. So I'm hoping that maybe there's markets kind of like recollect their minds this coming week. DXY, you know, retraces a little bit on the H4, you know, just trying to figure itself out, buying time for EURUSD to make its way up to a better supply, because this supply is confluent with the master supply, the weekly supply. There's a lot of confluency. if there's time, kindly take a look at USD Cad. You have not talked about it since the last sale you talked about. Yeah, we took that sale and I haven't done much there. I'll have a look at what's going on. I have not been in USD Cad, but I don't mind looking at it for you. I'll get to it. Right, so Euro USD, guys, long story short, price could fall here. This is a good supply. I won't lie. It could fall. If it does fall, I'm not involved. I'm just not in it. I just am not convinced that this is the right play. This order block has been thoroughly extended. Markets don't have strong signs of rejection. It's just absolutely, you know, not committing to it, right? So you get a bearish engulfing candle-ish on the H4 time frame. I'll make that tighter for you. There you go, and you get this literally NFP candlestick, but this happens before, right? This is the 12 midday candlestick, right? So this dig into this area is at 2 p.m. in anticipation of NFP, and then by 3 o'clock, price is falling and rotating around, right? So this is not, Euro USD isn't showing me signs that they are happy, you know, that there were jobs, etc. Now, if I'm not mistaken, if I draw a bullish Fibonacci, right, I am sitting literally in the middle of PCP numbers 0.236, 0.382, and most importantly about that is the fact that on H1 there's a bullish engulfing candle, a valid one. Also on H1 is a PCP that looks like it belongs to the upside. All right, so I'm not sold. And if I remove all of this and just look at it from the perspective of, you know, lower time frames, right? If you look at a lower time frame and you're looking for a supply here on H1, you don't have one. You don't have a clean imbalance on the H1 time frame. Not that we care about what the H1 time frame is doing, but I'm just simply saying you don't have an imbalance. The only, you know, true supply is all the way on the other side on the H1 time frame, and that's it. It's already done a fresh touch, and now when you look at it, right, you got glass effect and it's broken. To me, on Friday night, I thought, nah, I'm not going to sell. I'm just going to go to sleep. This H1 supply is broken. And if that's the H1 supply that is holding the H4 supply, if I can do this, so you can see that's the same wick that's holding the H4 supply. And if I can bring everything together, right, and which is the same supply that's holding the daily, then as far as I can tell, this daily supply is broken. So I'm doing nothing. I'm not, and when I say doing nothing, I want to sell Euro USD, but I'm definitely not going to sell there. No way, Jose. I'm not selling this. So I'm going to wait for my original trade idea, Euro USD. I'm going to only take confluent sales because I think the Euro has, you know, a perfect opportunity to be weak for a while. What we don't like is obviously the fact that this is now coming at the expense of a trend line. Because remember, when they break market structure, you know, you never know what the bigger picture is. But for now, I'm doing nothing. I'm going to wait to get tagged somewhere up here and then slowly start to adjust. 365 registered students, my entries and my stop losses are all in the master traders spreadsheet. I will probably be making a slight adjustment to Euro USD fundamentally because I noticed that I actually don't have where's Euro USD? There it is. There. This is the buy, which is all the way at the bottom, and my sell is at 1,15, right? My entry point. And for some reason, I like to be in the 1,16. So I want to sell a little bit higher. This is for the 25K account, and I think it's the exact same for the $6,000 US account. Yeah, it is. So this is the stuff that I need to think through tomorrow, Monday, when markets open, which is my final entry point, and you're gonna see any edits. If I change a plan, by the way, on the spreadsheet, 365 students, I'll mark it in yellow. So if you see yellow, it means there was a previous pending order there. All right, let me show you what I mean. That's very important because how would you know that I've updated it, right? So this yellow here, anything that's yellow should just be like, what's going on? This is not a good risk to reward ratio. And I went over. I'm supposed to be risking $12 per trade here for the 0,1 group, right? The guys who are trading at 0,01, and this is just about, right? So it's just something to take a note. But if tomorrow I make an adjustment to Euro USD and I update the entry point or the pending order, it'll have a nice yellow like this, just to let you know that, look, man, it's happened, right? And then I'll send out an email just for those of you who are taking all my trades and mirroring my trades trade by trade. Just note that, right? So that's Euro USD in the bag. and someone has asked us to look at USD Cad, which I will get to. You guys okay if we do another 15 minutes, just another 15 minutes, because I still have a couple of assets to get through. Euro AUD, we've already covered it in the why I lost the sell. Price came to up, prices in here, and markets are not selling yet. I'm not yet convinced, all right? It's something weird about the markets, guys. You know, why isn't dollar super strong? It is, we need to wait for buyer momentum on the DXY, essentially. We honestly need to wait for some buyer momentum. So holistically, if we look at Euro, because everything is updated, you guys have this on by the 1st of February. These are the orders, right? Look at this long momentum. You see, it's so beautiful. We can understand everything. Look, it's momentum. Momentum is still growing on the buyer's position, right? One day they're gonna drop. It's like, so look at this. They've been very tight since January, when markets opened this year in January, 49.8 long, 50.2, right? There was like a 0.2 little minor difference between the orders. 50.7, 49.3. Then we saw momentum jump to the upside, 53%, 54%, and now we're here, you know, 83.7, right? But they're still long, right? They're still trying to push up, building momentum. It's not for us to buy, it's just for us to know that these guys are doing this. And whenever they build momentum against the governor, is to sell high. They're pushing price up to sell high. Why sell high? Yeah, baby, because all the money here is towards the downside. If I look at Euro USD, this part of the spreadsheet that I need to add to you, I'm sure I've done it already. There we go, Euro USD. You will notice that in terms of net positions, they are positive for now, kind of positive, which is so important because we can see. Remember, guys, this dropped on the 1st. Let me come here, take you back. Where's the bar chart? I don't even remember. There it is. Here. This dropped on the 1st, right? This dropped on the 1st of February. This information, Euro USD, it dropped on the 1st, where we realized that there were more long positions than short positions, right? There was a massive change in orders. Everything else happened after the 1st. Now, you would not have known that because for it to drop on the 1st as a retail trader like Leroy, like yourself, like a hedge fund company, you only got the data on Friday, which unfortunately is now too late. But if you look back now into understanding their position in the market, it was only after on the 1st of February, Tuesday, when they added more buys to Euro, that all of a sudden ADP on the 2nd, NFP on the 4th happened, right? So these guys have been kind of like, they try to hide their movements, but we can track them nice and slowly. So they are long-ish to build positions, but I think it's to build so as to sell. Remember, we only trade alongside institutions when the conviction is roughly, you know, in the 80s to 100s, but also 70% is not too bad, right? And I'm telling you right now that right now these guys are pushing up for their final sell. If you look at Euro USD on the governing time frame, it still needs to drop to the governor. And what better way to do that than to find a higher supply and drop? And for me, the whole point is to get to that weekly supply. That's why I'm very keen on waiting for the weekly supply. So Euro AUD, same story. We got Brent here. I got Brent rather, trying to sell. You know, I thought this was the best sell place. I'm even happy to relook Euro AUD and start to try and sell at a better confluent place. So let's quickly find that. Okay, yes, we can do another 15. All right, cool. Someone's like, there's enough time. Thank you, guys. Appreciate you. Appreciate you. It means I'm doing something right, I hope. Right. Now, look at this thing carefully. Euro, you now know there's 200 and something thousand orders for Euro USD on the upside. Now, look at this. Not a bearish engulfing pattern. Closed range removed. Price removed. Nothing here. All of this is trash. It's trash. All of this here, this here, there, up to there, all trash. So inside this moment here in time, I am almost forced, and I really want to make sure I'm doing this carefully and not rushing because of time. But inside all of this, Ugh, man, why was I so dramatic in saying trash, 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 and I have to delete all this stuff? Now, inside all these areas of value, if none of them are valid and sound, then we have to wait for an upside, which is why I'm starting to wonder if that DXY demand is going to hold on the daily. I'm so happy that I went to go play golf on Friday and did not risk no money. Right, so look at this. So there's a sell there. Obviously, the sell is the one that we spoke about that actually failed. This was a terrible sale. And lesson learned, right? Look at this. Not a bearish engulfing pattern. So maybe I was rushing through a war room and I assumed it was a bearish engulfing because it did this, but clearly it wasn't, and we paid the price. So we can say LFP did it and euro was strong, but at the end of the day, from a structural perspective, it wasn't a bearish engulfing pattern, right? So price left the zone, there's the zone, and we have no imbalance. So I lost this trade because I didn't listen to my rules in module 1. I messed up. That's literally as clear as day. Yeah. Euro is strong. But even if euro wasn't strong, this was not a trade to take. If you really look at it carefully, that's why I always say, those of you who are not part of the academy, war rooms are good. But on Mondays, I take the time to sit through the assets discussed in the war rooms and really slow down and go, do these match my rules? This is my area of value. This is where price 10. That's my area of competition. There is no imbalance here. We need an imbalance because it's not a bearish engulfing pattern. So this is not surprising that price rallied, right? And we can say the same thing here. And I can see that this is the only supply, but it's now broken, right? So on the weekly time frame for Euro AUD, then we have a problem because now we're waiting for something that looks like that. There's the only time in a very long time price actually saw a real imbalance all the way up there. We're going to switch to a Kinihashi candlesticks just to double confirm my bias. And then we're also going to have a look at the governing time frame just to double check my bias. Right, so from a governing perspective, you drag it down here like that, and then price made contact. There's nothing else happening here. Even if you're to say this is a supply, you don't have an imbalance. Hakini Hashi, please come out and confirm. Confirm, right? Confirmed, right? So now price is making its way back to a supply. If it's making its way back to a supply, it's still leaving a demand. Pause. Where's the demand? Here. Right, and this demand is weak, glass effect, ladies and gentlemen. So if the supply can hold, the next time price makes contact, this demand will definitely crack, right? This is what we want to see. Now, for price to get up there, right up here to that supply, they have to start pushing up the orders. Do we have Euro AUD by any chance? US dollar? No, I'll have to make it. I'll have to put the data together for you guys. It would be nice if they had it, then I wouldn't spend so much time doing it. But it's not here. It's fine. I'll put it together and put it up on the master spreadsheet. Now that we know that there isn't anything there, we could assume that there is a turning point here. We could honestly say, look, man, maybe something here on the weekly. But we would need an imbalance to confirm it, right? And the only imbalance is this one. And so if that's the only imbalance, right, and we do something like this, we have a problem because then that weekly supply is almost maxed out, right? So that's why price was fully rejected there, making touch on the trend line, price on the other side of the trend line rejection 1, trend line rejection 2, breaking, about to break a supply, right? So I personally feel like we should wait for a higher supply. And then this is the final push here. You see that there? Nope, that's also broken, right? So all these supplies have been removed. And now all we're waiting for is for price to get to a better supply. I'm going to go back to normal candlesticks. Right, so for me on the weekly time frame, I'm looking at a situation that looks like this. Yes, this whole area is a monthly supply. But if price is coming back for a retest, it's going to have to dig a little bit deeper, go a little bit higher. Weekly supply there, then I find confluence, find a daily, and then we start to think, right? And the reason why we're looking for sales, guys, is obviously because most buying has happened, right? We're late as buyers. We could take a trade like this. This is for cowboys. This is for my cowboys. My cowboys. This would work. And the only way it will work is if there's confluence, at least with the governor. The only way that's gonna, you see this red zone? That's the daily. If there's confluence with the governor. All right, Cowboys, I'm happy to ride with you on this one. Right, so that's how big the governor is, and Cowboy trade is literally in there, literally leaving the governor. But let's look left, because this area is fresh. I like it because it's fresh, and I like it because, you know, it's still close, has the potential to keep the downward trend line intact. But looking back to the left now, you know, that's the problem with these things. You always have to make sure you're not playing at an area of value where price has, you know, broken or whatever. So if this was a supply made in December and price rejected, and then dropped, and let's actually draw this entire bearish engulfing pattern drop. Let's make this big. Let's say this was a supply, and it is, but let's say you couldn't figure out where's the highest point, etc. This would be your problem. Right? Drainage. Now, I agree that when we get a module 2 supply and demand, as we've talked about in the course, it has every right to stand on its own as a new supply, as a plaster to hold the zone. I am aware of that. But I don't like the fact that smart money removed a supply just to create a supply. It's always a trap, right? So I would have a very small lot size here for fun. Not for fun, for the chance that price might sell, small lot size, and I'm going to keep the zone red. I'm going to call it a cowboy trade. You know, cowboy trades are people like to take unnecessary risks in the market. Some of those risks pay off, others don't. The supply, when it stands by itself, is fresh. All right, but when you look at the bigger picture, it is in reaction to an original supply, and we need to be cognizant of that price might not like that. Now, let's make sure, folks, that we've got a real bearish engulfing pattern. Right, the definition is it has to be equal or above. We've got an equal open and an equal close, so we do have a bearish engulfing pattern here. Right, so I will take this with you, all right, but it is a cowboy trade off the bat. So because it's a cowboy trade, I will accept a 5% risk, and if I get tagged there, I won't blame anyone but myself. And I'm happy to take the L and then wait for a true sell here. So this is a true sell. What we call a true sell is a peak supply, you know, within a supply where most of the sell orders originate from, right? So I would draw it something like that for my Kinahashi, and then I'm going to pull out little candlesticks to then finalize this whole thing. By the way, if you're still around and this has helped you, please don't forget to like the video. I would appreciate that. It just tells YouTube to show our stuff out there, because there's a lot of terrible market information. Not that I'm always right, but I can confidently say I think I know what I'm doing. The proof is in the pudding, right? So we've got a failure to engulf here. All right, so we're gonna do module 1 supply, where is highest turning point, leave the lower wick for area of competition, and then we do have an imbalance, but it's kind of weak, right? Then price finally comes back and price starts to slowly go down. So if this was a fresh touch to get the push, then we're relying on this, and this euro UAD supply demand all the way at the top there gets us right into the heart of the monthly supply, weekly supply, and it's the closest to an ultimate stop loss. The stop loss, remember, will be the coolest because it's literally outside a monthly area of value, right? Unlike, you know, selling here and then waiting to be wrong all the way there. So there are two potential sells, stop loss somewhere here, obviously. And be careful, because you know history can repeat itself. My mom used to love saying that to me all the damn time. After I blow an account, this was a couple of years back, and I was like, yo, it's tough, they're gonna evict me, please pay my rent. She'd be like, history repeats itself, stop this trading thing. It's funny, she actually didn't say that when I bought her a house now, huh? Ma. Right, anyways, be careful, because what I mean here is when price came up this area, it broke this supply but still dropped, right? So history can repeat itself in the sense that if your stop loss is too tight, price might remove this cowboy area of value and still drop. So I'll let price breathe. I'll let the stop loss breathe a bit, use a smaller lot size, and then have a better pending order here, right? So this would be a true sell. if that makes sense. If you don't have a lot of capital, I always suggest you wait for a far much more convincing area to sell from, which will be up there and not down there. Right, so that's Euro AUD. Euro Pound, there's not much to say because we spoke about this last time, so I'm not going to waste too much time on it. I think I'll probably stand by my analysis unless if this week markets shook the plan. Right, so I told you guys, look, man, yeah, nothing's changed. Gonna wait for it to sell up there. I'm honestly done with the mind games of this thing. I'm gonna wait, let it come to us, then we ride, right? Let it come to us, then we ride. If we go to the H4 time frame, you know, maybe it's just not clear. Right, let's see. Right, so you see this, I don't like. I'm just going to remove this actually. I don't like that. Why should we play second fiddle? There's not much money left, right? Look at this. Beautiful supply, beautiful imbalance, rally in, supply almost completely drained, price ran down. Yeah, Euro Pound, here's the adjustment here. So I need to make sure I adjust the trading plan on the master trader spreadsheet. Like I don't care about all of these suppliers along the way. I'm not, there's some, you see, all Euro pairs still need to push up, guys. And it doesn't make sense. Like dollar has to be strong. So be very careful that the dollar doesn't catch you with your pants down this coming week, right? The dollar might disappoint a lot of people. But now that H4 supply is done in a brilliant daily, I think that's why I made this area this big. You see how I made this 98 pips, rather go within a small lot size and just hold as a swing trade. It makes no difference to me because really Euro Pound is meant to fall very, very far, right? There's only one demand, governing demand all the way down here. I think we spoke about this last time, right? So if you look at the governing time frame, there's only one place for this thing to go, and you can see it's already gradually dropping, but it's coming here. So I don't mind holding 98 pips as an area of value because my psychology allows me to do that. I am absolutely okay with holding price, right? So I can swap out 98 pips for, and I'll tell you now, so that you see if it's worth your hold. I can have such a wide entry point as long as I hold up until I get my full 661 pips, right? I think that's golden. So for me, you know, if you're not sure whether to take here or here, you could have one tiny lot size on the daily covering these areas here. But be careful because this is still strong. There's like a strong arrow, right? We need distribution. We need like a PCP, a 365 candle, something to slow down the sharpness of how fast price is rising. And then you could have a very good lot size that is so close to your stop loss value inside this area here on the H4 time frame, right? So like a very nice tight area because this is quite small. Here you're risking peanuts, right? So you could, for the distance of pips in risk, you could always swap that for a bigger lot size. And guys, when I'm saying bigger, I'm still talking within the realms of 5% and risking smart and all that kind of stuff. Right, so that's Euro Pound sticking to the plan, although there might be a slight adjustment made. Whatever was going on here that we discussed last week, I don't remember whether I said sell here. I don't think I would. But the fact that I saw this highlighted, I might have been teaching on it, but just in case, not to confuse anyone, I don't want to sell here. Glass effect has happened. There's not enough money. I'm going to wait for the big money up there. Right, so I'm waiting for a big sell. And if I get triggered in Euro Pound, I'm not closing that until I hit my take profit on the monthly demand or unless Jesus comes. So whichever happens first. And since Jesus has been coming for almost 2,000 years, I think I'm good. I will make that money long before that, right? So I mean, it's clear as day. Euro Swiss franc on the weekly time frame. I put an X here. There's probably a daily supply there. Don't do it. You see these little traps. You see the arrow. The arrow, guys. Never forget about the arrow. Force from an area of value, a supply or demand to the very first order block. If that order block does not receive distribution, it will be taken out. Here's a weekly supply with almost perfect imbalance, but not. You see there? Trap. Trap. You see the stuff in module 3. Please don't worry. Just because in the war rooms, all the traps, bull traps, bear traps, everything is laid out for you in module 3. So you will learn properly, not in a rushed manner like this in the war rooms, but just be very careful of this. Just always think about that arrow effect. So the only supply I can see on Euro Swiss franc, and Swiss franc is meant to be weak, by the way. If you see on the master trader spreadsheet, I did update it for you guys yesterday. I'd be going overtime for the academy sometimes, right? Look at this. Look at this. It's weak, man. 92% of all orders on the table are leaning towards the sell side. The bloody problem is commercials and hedge funds are trying to prop it up, right? But we're going to sell. Banks, hedge funds, non-commercial positions, only market speculators, 365, we are selling this thing, right? So when you look at Euro Swiss franc, you expect price, to be that strong. Right, you expect this to be happening because this thing here is weak, and it's weak because technically speaking the dollar is stronger than it, right? So if you go to the daily time frame, when you're doing a multiple time frame analysis, you will see this area zone gone, right? Gone. We don't need it, right? And there I do acknowledge that there is a strong supply, but this life has taught us anything. Supplies without confluence can be very dangerous unless they carry a Fibonacci confirmation, and I suspect this one will. Even if I don't like it, I suspect if I draw a fib low, fib high, just by looking at charts, you always have a feeling. There, you see? Life. There you go. Fib high, fib low, there's nothing I can do about it. Even though it is no confluence, it could be where they take a break. So, man, isn't that a shame? Ain't that a shame? Ain't that a shame? Ain't that a shame? Yeah, we're gonna have to go double the pending orders, unfortunately. For those of you who are willing to risk that, it's up to you, it's your account. I'm just gonna explain my logic and tell you what I'm going to do. I am not selling here because I don't want to be liquidity, nor am I dumb money. My first supply is gonna be there. This one, I'm gonna mark it red. It has zero confluence, but it is also the perfect place to start a retracement, right? So what I'm gonna then do is I'm gonna have to split my allocation for this trade if the pips allow. If the pips allow. So that's 75. So the pips are not going to allow, unfortunately. So I'm gonna have to double watch it, treat it as each individual trade. As soon as I can break even, I will. All right, so it's 110. Right, so here I'm gonna take 5% reasonable lot size, normal lot size, and also have another sold position there. I'm only selling here if on Tuesday, Wednesday, I see distribution. So I need a red candle like this. I need a PCP. I need Euro to at least acknowledge. I get it, they won, but I need them to at least acknowledge something. Just acknowledge NFP, acknowledge dollar is strong, and then after that, if it wants to go up, I'm happy. I'm fine with that. I'm happy to allow for my pending order, but I'm always busy, so pending orders get triggered without even me knowing until I can see that they're running. So I'll have a pending order here. There's a golden ratio. I'm not worried about losing money because I explained to you guys when we created a system on how you can become profitable over averages is number one, you look at your balance, right? Remember the rules, right? We spoke about this many times, right? Trading plan, where's this thing? You remember the rules. Whatever your capital is, you don't trade your entire capital. You trade what we call maximum pain. If I lose my maximum pain on the small account that I'm using publicly, all of you you know exactly what I'm doing. This one here, the 6,000 US dollar account, right? This one. My maximum pain, you would think this guy is 6,000 US dollars, blah, 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 blah. It's like real account, yeah. You'll think it's a lot. No, I don't care that it's 90,000 rands that I put in there. My maximum limit is 250 US dollars. Then I'm lot sizing against my maximum pay because I don't want to refund my account any other time during the year again. And that's how it is. I take my profits at the end of the year, every financial quarter, and I don't refund throughout the whole year. But it's because I'm actually good at accumulating winning trades as I go. So that's why I thought the only way to start is at the beginning of the year with everyone. So all of you have my pending trades. So if I'm losing, I'm losing. If you see on the 25,000 US dollar account, right, we've had this was the stupid Euro USD account trade in January, fine, whatever. It was a 1 hour trade. That was just dumb. That was just dumb. But despite all of this, 1, 2, 3 dumb trades, I'm still profitable because I had one good trade that I just kept holding, right? And none of my good trades have been triggered yet. And the same with the small accounts. So just for everyone to be clear, I am taking 2 trades, but all of them are in accordance to my maximum pay, right? So however you're doing your money management, and there are 2 good videos on our YouTube channel. I'll put like a thing there, a risk management part 1, risk management part 2, that you should go through. That was an actual class of mine about this kind of stuff, right? So I'll risk here and risk there. Moving on because of time. Euro Swiss franc, done. Oh, good. We're almost done. We've got EURNZD and then USD Cad that someone asked to look at. EURNZD. What's going on here? EURNZD was from War Room 51, the one we did last week. Thank God we didn't put a pen in order yet. Same story, guys. All the euros are strong, blah, 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 blah. We find confluence, find confluence. Strong arrow, man. Right, so this was never gonna work, right? You can see this is not a bearish engulfing pattern. Like, this is terrible. This is like, what's going on here? This is like drugs. There's literally no imbalance, right? Thank God this is not a pending order. Thank God I saw it on Monday and I didn't put it in. Remember, I add the pending orders every Monday after war. This is crazy, right? So now we wait. Price could be coming up here. No. If you lose a Kinihashi, you'll see something like this. Let me just remove that. And, you know, and remove the white line. Right, so price could be coming up here where it's already arrived. That's number 1. And if you draw it carefully, you will see that these guys are really trying to pump the euro up. It's like, I honestly believe this is the final rally before the final sell. You see that there? Supply is broken. So in my opinion, I'm not trying to sell with you right now. The price could decline and try and find a daily demand for it to kind of like go back up to. But right now, these guys have no interest in pushing price up, which means we are all forced to go back to the governing supply, which is fine. For EURNZD, we are forced to go back to a governing supply. A governing supply, by the way, that is beautiful, a governing supply that I believe is fresh, a governing supply that just needs somebody to love, right? So if leaving, left, returned, then left. So kind of a strong-ish imbalance, not the best, but it does exist, you know, Kakinahashi even better, right? Plays like, come on, right? So we're coming up. So EURNZD, I'm bullish. It's one of the few euros that I'm happy to buy to because we're leaving a demand, going to supply, have not arrived at a supply. So when I come to my daily, I'm not looking for daily supplies. I'm looking for daily demands. EURNZD, I am very bullish until we get to our governing supply. So that's a weekly demand. If I find a weekly demand, all I need to do is to find confluence. Change to candlesticks. Sorry, just want to see the weekly demand one more time. Into normal candlesticks. Yeah, that's clean. I like that. That's quite clean. Right, so look at this. This arrow is parabolic, right? It's what happens in crypto. When crypto is too parabolic like this, it must break. It will break its back. It has to. It has to. Right. Will it break before getting up here? I hope so that we can buy. Right. We need a retracement. So what you want to look for is, you know, if price doesn't come here, at least have a retracement catch. You understand? Have that 0.61%. We've got an order block that's not yet valid. This is the next best place to buy on the daily. I always love you. Right. So between these 2 areas here, and I don't think they're big. Honestly, you will be surprised that this is not even more than 100 pips. Or am I smoking crack cocaine? I am smoking crack. It's about 200 pips. Yeah, so you're gonna have to treat them separately, unfortunately, and be very careful with that, because your stop loss, if you just target this buy here, which is fine, right? It's accurate, it's fine. But the problem here with a trade like this is your stop loss, right? It sits on top of an entry for a lower buy. And so if that, does that make sense? You guys understand what I mean by that? I'm saying if markets were to come and buy and dig deep, your stop loss would have to be somewhere outside the zone, right? So let's make this red. Let's make this red. So if you make this red like this, so the red zone, right? So your stop loss would have to be something outside the entire red zone. The problem with your stop loss being outside the entire red zone is your stop loss is also a potential entry point for the second demand like that, right? So what are the rules with such things covered in our beautiful module 1? Guys, everyone in the course, please, let's all go back and do the course in our spare time. The videos are there for you. It's just 2 hours per class. I know it's a lot of talking, but it's good market information, right? We all know the rules. Just wait for the lower buy, because what that does, it frees you, and you now have a safer stop loss outside here, and you have a very good entry point there, which covers this upon entry, but you're getting a good buy low. So EURNZD, I'll only want to buy somewhere here. Right, that's my buy. And then if I get my buy before, I don't want to buy if price makes contact with the governing supply. I want to buy before price gets there, right? So what will happen is without us, you know, price could do this and then go there, right? So, and then if it does that, you know, tough, life is tough and life is full of surprises, right? So for some of you who are interested in catching that type of a buy, you know, you better hope you're good with your smaller time frames, and specifically in the H4 time frame, you're looking at this. But I'm only going to take this buy, and I want you to hear me correctly. I'm only going to take this buy if on the daily we get a swing high. So if we get a red candle on the daily, number one, like this, so Monday, Tuesday, Wednesday, at some point in time, the markets give us this, right, swing high. Then I will then go, all right, so now I've got a swing high, swing low. And because I've got a swing high, swing low, you can see we've got a 365 candle somewhere here. If we draw it correctly, it'll look like this, and then that will look like that. And so technically speaking, we need a couple of things to happen. Number one, we need Monday to be a green day for Euro 1. Right, and then if Monday is a green day for Euro, what do we have, 365 traders? We now officially have an imbalance. Then when we have an imbalance, we want Tuesday or the next day, you know, I'm just making up these days, but basically this has to happen almost like this. We need Tuesday to be a red candle. What happens is when you get a red candle, you finally have a swing low, swing high. When I get a swing low, swing high, I can start to play around. I don't know where it will be right now, but if it's somewhere, something like this, where the red candle is somewhere up there, right, I can then start to adjust my Fibonacci and say, where is it? What would it take for me to buy here? It will take price to keep going up and then to turn early, to turn just before my governor and then come back to the Fibonacci area. If there's a good imbalance, Fibonacci confirmation, and then for sure, I could take this H4 buy, specifically maybe something here, bullish engulfing pattern, right? This is not nice. This is weird. Very weird. Price created a higher low, then a lower low, and then a higher low again, right? So price was not sure what it was doing here, right? You know, that effect, okay? And then you got a neckline, then price exploded to the upside, which is fine, right? So I hope that makes sense, guys. Otherwise, if none of this happens the way I just said it would, where I get a perfect swing low, where I get a perfect Fibonacci confirmation, I do nothing and then wait to buy there. That's all, simple. But if markets don't even bother to come down for me and decide, where were you last week when we were rallying like crazy? You don't deserve money for the buys. I'm okay with that. You know, it's absolutely fine. All I'm waiting for is the sell, the ultimate sell. And the ultimate sell is inside the governor. So we redo EURNZD and we start to break it down from a seller's perspective. From a seller's perspective, monthly, the governor looks like this. Yes, this man, Eskom is back. It's so annoying. And my little girl, just because we allowed her to, every time she cries, we switch off the damn generator. She now thinks she has rights in the house. Like, she won't stop. Yesterday she would not stop yelling at the sound. She really hates it. But it's really, Eskom is messing up my vibe. Right, so this is really what we want to target as a governing supply. Right. And then we want to find mayoral supply. And this is the first one and the second one all in one. Right, so we could say, you know, the highest point is there, and then we could say that's the reasonable party, but the only problem is the mayoral supply is a little bit lower. So this whole area here is, you know, got the potential to drop, right? But let's do something like this. Right, and then we could say area of interest for a perfect multiple time frame analysis where price dropped, which would be our immediate area of value. Is that from a mayoral perspective? And then we now know that we're inside a monthly governor, so we can delete all these other yellows to help us see clearly. And then we move to the daily time frame. I'm just trying to find a perfect place to sell. On the daily time frame, we'll have this situation here. Perfect. Right, just absolutely perfect, which would look something like this. What does that look like as a normal thing? And guys, I appreciate you for sticking around. We go lower. Yeah, we absolutely go lower, man. Thank you, Alvin. There we go. Right. So, and that is that an engulfment? Is that an engulfment? Is that an engulfment? Is that an engulfment? Equal highs, equal lows. It's a tricky one, right? It's equal up, it's equal at the bottom. It should have engulfed a little bit more, but it is in a weekly supply, so this is going to be slightly a risky trade to take, so just be very much aware of that. Let's see. Old school imbalance is there. Price leaves, comes back, leaves. A weakish imbalance, not so strong, but it is at least protected by a weekly supply. So I would try to sell there. I would absolutely try to sell there first. And then reassess after. So that's my sell area and that's my buy area. Like I said, guys, I'm only buying if price really goes all the way down, and I'm only selling if price, you know, enters that area there. So in reality is that's my buy here and that's my sell. So EURNZD price needs to come to me. Either way, I don't care, right? Whether you make contact with the supply first, then make contact with that daily supply. But if you are going to retrace, give me a good imbalance and give me a fib, and then I'll buy with you here. If not, leave me alone until I buy down there. Right, and then somebody did ask for USD Cad. I hope he's still around. The lady or the gentleman, I can't even pronounce your name, but here's USD Cad. I hope you're still around. Right, so we made the money. I have not gone back to this thing, man. USD Cad, let's see. So we took a sell, took profit there. I should have bought, right? We should have bought. Why did we buy? Hey, why did we not buy, man? Why did we not buy? Yeah, Captain's program. Someone said in the private group, he prays that people stop trading in secret and we bring back the Captain's program. And I think I might have to be very much involved in it for the first 3 months just to really get it going. Because if we had a USD Cad captain in the private group, the USD Cad captain would have told us to buy, right? So let me move to, I'm a gentleman. All right, sorry, man. Sorry. I just couldn't pronounce your name. Nice to meet you. Shake my hand. Right, thank you, sir. There you go. You know, I have to ask now because once upon a time I called a lady a gentleman, and she genuinely was offended. Right, so look at this. USD Cad made contact with the governing supply. I think we talked about this at the beginning, at the end or middle of last year, that this was this USD Cad moved the most in 2021. All right, or was it 2020? 2020. It was the most pair that collected the most pips, just the drop, that Donald Trump drop, and then slowly moved accordingly with, you know, Biden's demand, right? So it's got such a rich sell momentum. And the problem with USD Cad, number 2, is we want a strong dollar because the dollar has to be strong, but also Cad can be strong because oil has been strong. I mean, oil has really done a good job of actually reaching its targets. And just so we're all clear, oil, crude oil, I was very, very surprised. I mean, come on, 365, shake 11. This is crazy. This is absolutely crazy. I was mind blown, when I was catching up with the markets, that oil could be, this decisive, right? So oil beat the Goldman Sachs 84 something level, which was 88 right there, and then literally pushed all the way to about 93. And so it's a non-brainer, right? That oil is definitely heading towards $100. Like, it's literally nothing can stop it now, right? And then after that, price can start to negotiate, etc. So dollar is strong because dollar is strong, but CAD can also get very strong because oil is strong, right? So this chart is a chart of negotiation. Who gets to shine first? Now, when I'm looking at USD CAD, I'm annoyed. After that sell, I got comfortable. I should have taken a buy, but now, with this happening here in December, you can tell that price did make contact with an institutional supply. You can also tell that it's not the strongest institutional supply, it's a PCP. But the reason why I don't want to make a trade based on that, that is a PCP, is the fact that it's not yet broken. And history tells us that if they don't remove an institutional zone, we have no right to assume that they will. If you look at this demand, right, you already know we got a glass effect. If you pull out a Fibonacci from the swing high to the swing low, 0.38 is PCP, potential continuation pattern. Well, which pattern would you be continuing, sir? Well, yeah, the downward, right? The PCP. And you already have a weak demand here. But for that to happen, DXY must concede. The only way for DXY to do that, and I'm just bringing up all these charts so you see the full story, is the dollar must get to a supply. It has to. She has to fully commit. It's not going to be weak out of nowhere. Fair. And remember, on the 16th of March, my prediction is we are going to have a massive market rally on the 6th of March, when Powell is now trying to save the dollar from the supply in front of us. I'm pretty sure he's going to increase interest rates on the 60th. Write it down somewhere. Write it down somewhere. You see, I told you that some brokers, naughty brokers, have already broken the supply. I only find it here in capital.com, and I don't know what to believe. I know capital.com is a very big American broker, but if you look at the broker that I've been analyzing DXY on, supply is not yet broken. I'm like, what's going on? If you look at any other broker, I was shocked yesterday. Supply is not broken, right? It's capital.com that is like being naughty. Like, it's like, yeah, bruh, we're going up. And I don't know what to say about this. I really don't know what to make of this. But my point is, if, for example, CAD is going to drop through that demand, then DXY would have to agree that this is now a supply and that it's time to fall again. And it's neither here nor there right now. It's difficult to make that decision because I know FOMC is not interested in a weak dollar. He needs a strong dollar. He needs a strong dollar to combat the problems that he's created, inflation, etc. All of this to say, USD CAD, I don't know what to do, honestly speaking. I don't want to lie to you. I understand that I'm by a monthly supply, that price is now reacting to that, but I understand that price has been propped up by a lot of money to keep the dollar strong. When we drop to the weekly, we can see that price did do a complete full cycle from supply to demand, so it's keeping intact that DXY character, right? Maintaining demands, protecting trend lines, maintaining demands, protecting trend lines, maintaining demands, protecting trend lines. You see, and an asset like this, you can only but admire its strength. You can only but admire strength. I can remove this line. It served its purpose. I just wanted to catch the break, and we did catch the break a long time ago. And then now here, we literally, all of this was selling in the lower time frames into this weeks, and that has passed, right? Price has even overextended above all these things. And the question now is where to next? I would put my money still on the dollar. because oil is about to get to its target, which is $100 per barrel, then I'm pretty sure oil will have to retrace, right? The whole point was oil was meant to get there actually last year, by the way. And then with the supply chain problems, it just missed the mark, right? So when I start to narrow down that monthly supply, this is what I have on the weekly time frame. I also have this, but I'm not taking it seriously. I'm not taking any of that area seriously, right? I feel like this is now just a retail trader's playground. And because of that, I'm actually interested in seeing price buy through it, right? So I'm a bit bullish on USD Cad, although it's very unconventional. It's not my type of trade setup, right? So because I'm a bit bullish on USD Cad, I need a pullback. I need a pullback. There's no ways, like this area that I said I don't respect, guys, I'm just going to delete it. There's no ways I am willing to buy where price is right now. There's just none, right? Either the supply does what it needs to do and pushes price down. I'm happy if price breaks the supply on its way down. I have no problem with that. And then we have to deal with the big guy up here who tries to create a peak supply, but doesn't do so with a lot of conviction. Not a strong imbalance, right? Somewhere up there. Okay. I'm happy to wait for all of that to happen first. So I'm so sorry, sir, if you're looking for, you know, my play. What I do in these war rooms is I honestly just give my honest reflection of when and what I'm going to do, which helps me maintain a lot of accuracy. So instead of trying to trade every week, I only trade my setups. It's just simple as that. And right now, you know, there's nothing I can do in here. However, if price was to fall back, sure, I'll take a buy. If price was to fall back a little bit lower, I guess, right? So maybe maintain the integrity of that trend line. We would need an area, a better area of competition, right? But if price was to fall around somewhere here in these areas, then I would definitely take a buy. I would definitely take a buy somewhere down there if price was to make it here, right? So make it somewhere here, wick in and then wick out to the upside. Sure, I'll take a buy, maybe, and stop up to the supply, maybe. You know, something like that. But until then, I'm really not going to do much because of I just don't like the setup here. What's going on here? You know, strong, you know, rebellion against the supply. 80% of the sell orders here have been removed. We're just waiting for price to trigger. But if price makes contact here and it's in line with the DXY supply, then I could sell to the trend line, right? So that's the only thing I'm waiting for. Right, so USD is touch and go. Fantastic. I'm glad it was helpful. Ladies and gentlemen, we have covered all the assets I had planned for today. So I really hope you guys enjoyed the war room. Thank you for sticking around. Thank you for watching. Yeah, have a good night, man. And then tomorrow when you guys get up, I'll be up at 4, prepping my day, meditation, reading a book for the podcast, and then about 6:37 a.m. to 8 a.m. I'll pre-record AUDUSD CAD JPY. We've already done EURJPY, so I'll skip that. Pound CAD, NZD, Swiss franc, gold, and Nasdaq. Those were my charts to do today, but I decided to do what you guys wanted me to do in the academy. But until then, shake my hand, man. I appreciate you. I appreciate you. Have a good night. 365. Cheers. It's going to take me forever to figure out how to log out. Okay, there we go. There we go. Fantastic, guys. Good night, everybody. Cheers.